Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Welcome, snipers. Thank you for joining Stock Sniper Trading. My name is Ron. My partner is Dave. Thank you guys for joining me on a Wednesday morning afternoon session where we will be reviewing a few stock securities in the markets that are moving right now, trending right now. One in particular is Netflix. We charted this yesterday going into their earnings, and hopefully you guys saw that they had an really good earnings call. They hit it out of the park. Analysts are saying it was pretty flawless. We'll talk a little bit about it. We'll go to the charts and everything, and then we'll do some other securities today. We'll take a look at some other names in the markets that maybe you can add to your watch list and keep an eye on them, and we'll go from there. So I just want to say thank you guys for joining. Hopefully everyone's having a great week. It's midweek. This is again how you review how you're doing going into the latter part of the week, specifically going into like a Friday. How are you doing? Did you get a good start on the week, Monday, Tuesday? Are you a little bit in a slump to start the week? Wednesday is always like a mid-week day to reflect and review on how you're doing and to maybe come up with another plan going forward for Thursday, Friday. So the markets do it as well. It's kind of like a midweek, either consolidation day, or maybe if it's trending, it might be continuation to towards the trend, or it could be a reversal day in the markets. If Monday, Tuesday were green, maybe Wednesday is a cool off day, maybe Wednesday is a reversal day, all of these things. So make sure that when you guys are trading, you guys are also reviewing your trade midweek, okay, and your journal. So thanks guys for joining, everyone. Welcome everyone on Zoom. Thank you guys. Welcome Barry. Good afternoon. Thank you for joining. Lisa, welcome. Dominique, welcome. Aaron, thank you for joining. Captain J Boom, welcome. Yes, we were just talking about how cold it is where I am, minus negative 35 with the wind chill. Which is very cold. I don't know if some of you guys have ever felt negative 35 cold on your face when you go outside, but it is cold. Wow. So thankfully today's the last day of this Arctic front that we got blasted through here, and hopefully it can warm up to maybe negative 10, negative 5. I'll take that. But it's cold. If anyone likes cold weather, come over where I am, and then you can experience the cold. Welcome, Winchester. Thank you for joining. What about PDP rules when it comes to stock? That all depends on where you are, Winchester. It all depends. There is some brokers now that and platforms that waive that rule, but back in the day, years ago, you could only, the PDT rule was you can make 3 trades per week, or if you had greater than $25,000 worth of capital, then they waive that rule. But there's most platforms right now that don't even like, you can check. Again, it's where you live around the world. Everywhere is different, but with today's technology, I don't think that they enforce that rule anymore. So just do your due diligence and have a look around at your. And what we can do is also near the end of the call, we can just mention a few platforms, and then maybe you guys do your own due diligence and see which one works for you, which broker works for you. Okay. But I have like webinars coming to explain all of these things. But just for now, if you want to just to browse around for maybe today, tomorrow, Friday, maybe the weekend, just to find yourself a broker platform to maybe open up a demo account and find out if they have the PDP rule. Okay, good question. Patrick, good morning. Dad, welcome. I love the name. Not my dad, but we got a dad here. Welcome. Sarah, good morning. Thank you guys. And everyone on YouTube, I appreciate you guys joining joining as well. Chaos Dog, welcome. Thank you for joining. Matteo, thank you. Conti, thank you for joining. Sivanish, welcome. Where are we from? We're from London, Ontario, Canada. The trading capital of the world, the real London. Will the real London stand up? London, Ontario. No, I'm just playing. No, we didn't stop trading Forex. We trade everything here. That's what we do here. We trade everything. But right now, we're introducing the stock markets to you guys. So if we want, we can just make a quick pivot and we're right back into the Forex market and we can review Forex. But right now, we're going to take some time to introduce the stock markets. Forex we do with the group, with Dave. And also in the London Tokyo sessions with myself, okay? But when we're in New York for a couple weeks, we're going to be focusing on the stock markets. Thank you, Trevor, for joining. Okay, welcome, guys. Let's get started. Okay, first thing is before we talk about Netflix. Okay, I know it's in the news. We just got to go through our daily routine. Let's take a look at Forex Factory to see if we're going to have any high impact news on our session. It's just after 11 a.m. Eastern right now. So what we can do is refresh Wednesday, January 22. We're almost done January, guys, for the new year. Like, when they say January is a big month of your New Year's resolutions, everyone's like, oh, I want to lose 10, 20 pounds. I want to start, get more active, more fit, start eating better, start sleeping better, start trading better, all of these things. So how far along are you guys with your new goals for this year? The first month should be a gauge of how you are. Hopefully, you guys are on the right start, the right path. I know in our sniper group, I can speak for the individuals in there that they are doing fantastic to start the year. Just mindset, executions, what they're doing, their trading plan, their routine, they're reviewing the markets on the weekends, they're doing their charting, they're doing their analysis, they've gotten better at risk management. Just those things, those are all positives, and the putting a foot forward and getting started. You don't necessarily have to be profitable right away and start making money, but just making those little changes, even if you just tweak your risk management and you just tweak a little things here and a little over there, everything will come together. But it just takes time, okay? So I just want to mention that to everybody. Someone said to me, Ron, I've been doing this for years and I still don't get it. I said, you got to have patience. You cannot rush this process. Trading is very, very, very difficult. It's not easy. It sucks because some people make it look easy. When I was learning, there was always traders I was looking up to, and they made it look so easy. I'm like, why can't I figure this out? Why am I losing? Why am I struggling? So all they kept saying was, Ron, it just takes time. It just takes patience. They've been in the markets for years and years and years, and they said same situation. They struggled as well, but they figured out the recipe is just time in the markets, exposure, experience, learning from your mistakes and correcting them. I know a lot of us make daily mistakes, but we keep repeating them over and over and over and over. How are we going to overcome anything if we keep repeating the same mistakes over and over and over again? Okay, so please, guys, work on your skills at getting better each individual day, at things that you start off with the top of the list, your biggest struggles, whether it's revenge trading, whether it's taking trades without confirmation. All of these things we can work on these things, okay? But it just takes practice every single day. And then finally, you guys will see light at the end of the tunnel and then understand how to do this on a daily basis, okay? But it requires time, okay? So you got to put in the time in the markets, you got to do your time in here. But hopefully we can help you along the way and save you time. So today's news, not a very busy day in the markets. Again, it's midweek Wednesday. There was some British news pre-London. Today's day 3 of the World Economic Forum annual meetings. We had some German news, Canadian news this morning. 10 a.m. We had some US news, but they're all low impact yellow folders. So I don't get too excited about yellow folders. I get more, my eyes gravitate towards those big red folders, okay? And then those high impact ones, because those are the ones that bring volatility and volume into the markets, okay? We don't have anything our afternoon that will be here together. And then market close. Again, you guys know the drill. 4 p.m. markets close. And then we have after hours trading. There might be some after hours earnings post market. Just like yesterday's Netflix, right at 4 p.m. You saw that big, huge candle, that green candle on Netflix's news. So we'll see who's reporting today. So let's go into that. So here's the report. There was already corporations that released pre-market over here. So we had Procter and Gamble at 6:55 a.m. Eastern. So this is all pre-market trading. You have the option to trade pre-market if you like. Again, we talked about this. You can only utilize market limit limit orders. You cannot use market execution with most platforms. So you got to put in a limit, buy or sell, whatever you're doing in the markets there. Johnson & Johnson reported, and then some other names here. Again, they're the smaller. You got some smaller regional banks, smaller tech companies, but you can individually trade these companies if you like. Just do your due diligence, put them on your watch list and research the company. Take a look at the charts, see how they're trading. What levels are they at? Are they at some support areas? Are they at resistance? Anything like that, okay? We don't need to dive too much into these names because we won't be looking at them today. After hours, again, I just take a glance at those big names. Like yesterday, Netflix, it stuck out like a sore thumb. We are all familiar with Netflix. Probably all use Netflix here or have used it at some point in time. But they reported yesterday. So, and that really affects the index that it is comprised in. So you guys know that Netflix is in NASDAQ that you guys trade, NASDAQ 100. When we're looking at the stock market, we can look at QQQ. If you guys like, we can take a look at that chart today and see how it is moving. But that one is high tech corporations in there. And then Alcoa today, Kinder Morgan, Discovery Financial, Steel Dynamics. So again, just some household names, no big names that I have to be really concerned about. So nothing really to affect after hours earnings today with the indices that we trade. You guys are familiar with trading in the Forex and things like that. Okay. Yahoo Finance, just some day-to-day news. TD, this is who I trade with. This is my financial institution. This is my bank. TDI selling US $9 billion of mortgages as it faces asset cap. If you want to read a little bit about there, we got Donald Trump in the news every day, all day. Whatever channel you go to, it's like he's the only person in the world that they talk about. But Donnie Trump is in the news over here. And then we have other news in the markets. Over here, Amazon Canada says it will close all 7 of its warehouses in Quebec. Why? Like, if I was trading Amazon, if I was a shareholder, I would like to read that article, see what it is. Why are they closing 7 warehouses in Quebec? Is this a negative? Is this a positive? So read a little bit about that. This is the big one we're going to talk a little bit about today. So Netflix shares hit record as subscriber growth defies odds once again. So big beat when we get to Netflix, and we'll talk a little bit about it. We briefly talked a little bit about it. We were talking about those NFL games on Christmas. We were talking about the Mike Tyson, is it Jake Paul, boxing. So all of these things kind of led into this earnings, because remember, it's a quarter over quarter, so it was the prior quarter, and a lot of these things happened during that quarter that it's reporting. So everyone said, holy, I watched those football games, I watched that boxing, but I didn't even think about how it would have affected Netflix at the bottom line. So I said that they would get some subscribers, they would increase their exposure, and that's in fact what it did. It wasn't just those events, but it was those played a big role. Those played a big factor on Netflix. So this is why I mean, guys, if you're going to trade a security, really get to know it. Like, if you're trading Netflix or if you are a shareholder of it, make sure you know what's going on. Do they have any new releases? Are they releasing releasing like a new series, all of these things. Make sure you get to know the company, because at the end of the day, you can make some money with knowing what you're trading. My focus right now is big on Microstrategy. I trade that security every single day, so I watch for news every single day. I scalp it, I intraday trade it, I go long on it, but I get familiar with that security, and that's what I'm personally trading right now. I can trade any one of these companies, as you can too, but I like to focus on one, get to know the levels, get to know the areas, so it's just becomes second nature. If you tell me how much it is right now, like it's trading at 373, I can think of where I made my daily support level. I can think, is it at a good level? I know when it starts to push, where the resistance is. It's just because I trade this thing every single day, and it's just staring at the same chart, just making some adjustments here. Okay, so what else we got? JP Morgan CEO says U.S. stock prices are kind of inflated. What else we got? Okay, so we got tariff talk right now with Trump. So JP Morgan's Diamond argues tariffs are good for U.S. security, even if inflationary. So we'll see what happens with these tariffs. He has kind of threatened here in Canada, February 1st, he's going to add the 25% tariffs. We'll see if he actually goes through with that, and that will affect both countries. But negatively when you throw tariffs on like that. So we'll see what happens with that. United Airlines, remember they were in the news. They had some earnings. So United Airlines growth is driven by premium routes. If you want to read a little bit about that. Johnson & Johnson, stock down despite beat on full year. So we had Johnson & Johnson this morning. What else is going on? Again, Netflix ad tier success exceeded their wildest dreams, and we'll take a look at everything that's going on. This is another good one, guys. Please add it to your watch list. AMD, Advanced Micro Devices. We were talking about this, I believe, last week. It was hovering around $120 a share, and I was saying it's a good opportunity because it was 25% discount off of the highs. So I would love to buy a solid security, a trillion-billion-dollar company at a fraction of the cost. And look at from 120 to about 125, that's $5 per share. That's how you start your way around these stock markets. Start to look for good quality securities at discount prices that are meeting that support area, are holding, are consolidating there. And this is a good one, guys. This one is very similar to NVIDIA with the microchips, but fraction of the cost and great company, and took a little bit of a haircut from 25% off the high. So we will chart that and talk about it. Okay, so just going forward, guys, our Discord trade ideas signals over here. We do send these guys out. This was our commodities section, gold. Nice buy on gold over here. Having some runners running and some trades running. FX pairs, we do some Forex pairs as well. Beautiful long move on GBP USD at 122.500, running 80 plus pips. And you can see right there the 122.50 and running. Congratulations to all snipers that are utilizing these trade ideas signals in their own trading and using them to help them out. With your analysis, and also giving you ideas to look at the charts. Okay, guys. And if you want to join the team, we'd love to have you on Stock Sniper Trading. We're taking it to the new level over here, introducing stock and options, and lots of webinars, boot camps, and education coming up. We also have a free blog available for all of you guys. If it's pinned at the top of the YouTube, and you guys are more than welcome to join. It's free. We were talking about this, becoming profitable in trading. Did any of you guys review this? You know how I kind of teach here. Put a check mark if you're okay at it. Put a check mark if you got this down. Put an X on it if it's something you need to work on. And then that's what I would focus on, because trading is overwhelming. And when you don't know what to fix or where to start, maybe this will help you out. So ask yourself and be honest with yourself. Have you developed a solid trading plan? Like, do you have a solid trading plan that you follow every single day? Or are you deviating from it? Are you changing it? Are you all over the place? So make sure you set clear objectives of what you want to do on a daily basis in the markets. Assess your risk tolerance. Everybody on this call has a different risk tolerance. I know my risk tolerance. It might be completely different than yours. So we can't trade the same. You know, you have a different risk tolerance than me as well. Some of you guys trade very high leveraged. Some of you guys trade, I don't trade like that. So that's the difference between maybe you and I. I trade with managing my risk on a daily basis. If I do make some mistakes, I do get stopped out. I've learned to walk away and come back at another time or at another day. That was one of my big struggles. When I was losing, I could not walk away because it was always stuck in my head that I got to get that money back. I got to get that money back. I got to get it back now. I got to get it back today. I got to get it back tomorrow. And that took me years to kind of overcome. And I'm thankfully I have worked on that, and it's helped me out tremendously. So that's what I just want to say. We are all different with risk tolerance. So you got to find what's best for you, your secret sauce, and work on it. Establish your rules for capital management. So if you're going to come and trade the stock market, you got to protect your capital. You are basically your own financial advisor. So you are your capital manager. If you're starting with $1,000 in the stock market, you have to manage that $1,000 properly. You can't just go trade it all, put it all in one trade and hope for the best. You can do that if you want. That is what most traders do, but 90% of the time it doesn't work out well. So of that $1,000, how much are you willing to allocate to today's trading? How many trades are you willing to break that down into? What are your rules if you get stopped out of the market? Are you done for the day and are you reviewing, or are you going to deposit more and keep going and keep going and keep going? This is not just for coming in the stock market. This is for anything. Make sure you have a plan if you're going to go a prop firm route. Make sure you understand the phases, the challenges, the combines, whatever you have to do. Make sure you understand the rules while you're funded, how to preserve that account and keep it. You got to know all of these things. And then more importantly, regularly review and adjust your plan. Are you guys doing this on a weekly basis, daily basis, monthly basis? Are you reviewing? Just like how corporations have earnings every quarter, they review what they've been doing, they make the necessary adjustments, and they move forward. So you got to think of yourself as like a corporation. Are you making the necessary changes every quarter, every month, every week, every day? Sometimes if you're a scalper, you need to learn how to make adjustments on the fly, on the minutes. If you're trading 1 minute, 2 minute, 3 minute candles, you gotta adjust very fast. You got to make snappy decisions. So that's why scalping is a little bit more difficult for most traders to learn and understand, because you got to make fast decisions. You can't allow emotions to take over you, because once emotions take over your trading, it really affects you. So lots to work on. That is just the first thing right here, developing a solid trading plan. So put a check mark, guys, if you're okay on this. Put an X or an O or whatever you got to do to work on this, and go through this list. I'm not going to go through it entirely, but this is for you guys. Understand your risk management. Stay informed and educated. Like staying informed and educated. We were informed that yesterday we knew that Netflix was having earnings. At what time? 4 p.m. after hours. We put it together, like all of the in the past, what they did, they had the Christmas NFL games, they had the Mike Tyson boxing match and other things. I think they got WWE, am I correct? Biggest lot? Yeah, the migration. Yeah, I was thinking about that, but I didn't know 100%. WWE used to be formerly WWF. You guys remember that when we were growing up with Hulk Hogan and Andre the Giant and those guys, it was WWF, and then they changed the name to World Wrestling Entertainment, WWE, and now I guess it's streaming, or they've taken the rights on Netflix and playing it, and it's huge. Like I'm not big into wrestling as I used to when I was a kid, but I guess it's still massive in the United States. Logan, his brother, is on it, one of the big stars. I think The Rock is still on it, John Cena, all of those things. But that's what's creating revenue for Netflix. And okay, so just go over this, guys. Quick blogs. This is just one. There's multiple blogs on here, lots of blogs that you can work on. Everything, a little bit of technicals, fundamentals, risk management, securities, review of the trade setups, Fibonacci. We talked about the Fibonacci tool yesterday. We were using it. Get to know it. Okay, and everyone on YouTube, there is a free Telegram link right over here. Where we do share our YouTube links, some trades that Dave and I make. Again, I'm focused a little bit more on the stock market lately, so I'm showing you. I'll review this later. This was today's quick little scalp on Microstrategy, and I got 2%. So remember, I aim for 0.5 to 1%. This one was 2%. I exceeded my target. It was good for $770 US, and I'll break that down for you guys. I'll show you guys the charts where I entered, why I got out, all of those things, and I'll tell you a little bit of story on how I trade this. I was in a drive-through at Tim Hortons grabbing coffee. Maybe I shouldn't share that story with you guys, but you guys know me. We'll have some fun. Okay, so are you guys ready to talk about Netflix? Make sure you got a coffee, make sure you got a drink, and you see my levels on the hourly. Like, look at them. This was from yesterday's analysis, and look at where we are right now. Okay, so we were over here yesterday with Netflix. You remember we started the call 11 a.m. Netflix was over here, 11, came up. That was the high of the day, the purple line. 2 p.m. came back down, right down into here. 3 p.m. leading into the earnings, closed really positive. See how it's just consolidating in here? Now, when earnings was released, look at here. See, did you guys see how it kind of, and it's very, very fast. This is on an hourly, but this could have been as soon as they released the news, within 10 seconds, 30 seconds, 1 minute. Do you see the wick? Okay. Are we learning now what this move was? Okay. I want you guys to teach me. I know what this is. I've seen this move a million times. I want you guys to help educate me. I want to see how much you guys are learning. Okay. Trevor, you got it. It came down. It just whipped down. I'm saying Trevor's words exactly. It whipped down for liquidity. Perfect. Barry, grab liquidity and pump. Exactly, guys. So get to know this move. Okay. This is a clue as to maybe what will happen. So let's now just dissect and break this down. So it opened, and remember, the news was positive. Like, we'll break down the news. So with positive news, why didn't it just open green and just go up like this? Right? That's the logical, that's common sense. It had fantastic news. They beat their EPS, they beat the revenue, everything, forward guidance, all of this stuff was flawless, is what analysts were saying. So why did it just open up green and just go? Okay, because the market knows what's down here. We use this like to represent liquidity down here. There's liquidity in this green box. There's liquidity below the green box. There's liquidity down below the purple line, the low of the day. Okay, now let's put the pieces of the puzzle together and let's see if this makes sense now. So, do you see how it opened? Remember what I just said? All that positive news, everything was looking perfect to go up, but it opened red and came down. You can see the wick leaves evidence. The wick on a candle, like, it leaves you evidence that you can kind of see what happened. So what happened was it opened red and it came down. Red, 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 came into this green box and continued to take out this hourly low, this hourly low. What hour low is this? This is Wall Street's low yesterday prior to earnings when it opened. That was Wall Street's 9 a.m. candle, and that was the low, and it was respected throughout the entire day. It never came down there. Earnings, they came down, and what did they do? They took out that low. Why? Because there's pending orders below the low of the day. There's pending orders above the high of the day. Okay, and these can be all types of orders. Okay, they can be number one, stop losses. Okay, if you were buying like over here, if you bought over here, then traditionally you'd place your stop loss below areas of support, and that's your stop loss. So stop losses got triggered. These could have been pending orders by buyers waiting to get impatiently in the market, and hoping that there would be a nice dip buy like this. So maybe they anticipated positive earnings on Netflix, but didn't want to buy the high when you can in fact buy on discount. So maybe had a pending order, limit order waiting down here in the green box, maybe a limit order waiting below the low of the day down in here. And if in fact you got triggered down here, it was like a gift that the market came down and filled you below the low of the day, and then just look at if you got that fill below 1155 to 1152 if you were in there. Holy shit, it's very, very difficult to get filled too during earnings, like right down to that specific limit price. But maybe if it was coming up, maybe you got filled in there and then straight to direct profit with minimal to zero drawdown. So before I move on, this is a really important concept, and it doesn't matter again what you're trading. This has nothing to do with the stock market, this has nothing to do with the options market, this has nothing to do with forex, futures, bond market, derivatives, whatever you're trading. This is simple price action principles. That's why if you study price action, then this will maybe make more sense to you. So do you guys understand? Are we all clear on this move? Because if you're struggling to understand this move, then you're gonna struggle to understand maybe if you see the opposite, if you see where they take out the high of the day and then all of a sudden it just dumps. So now that we've learned this move, this is the bullish liquidity grab to the upside. We can just do the same exact opposite if it's a like a bearish where they take out the highs and then they drop it. So same thing. If Netflix had maybe really, really disappointing earnings, maybe they faked it to the high and then came down with a big red candle. So just when you learn one concept, make sure you learn the opposite, and then it makes trading a little bit easier, because then you understand this scenario, then we can understand the opposite scenario. No problems. Are we good on this, guys? Okay, so this was a liquidity grab. You can see it visually now. So we remember yesterday we charted all of this. So now you can see, like, look at, there's the purple line. They took it out and grabbed that money right there. And so it was done for a specific reason. Like, this is not just natural cause. This just happened just because. This is all market behavior. Okay, it's done for strategic reasons. It's done to grab the volume. Once they have the volume, then they can do a move where it basically, look at this huge green boner candle over here. Like, this is, look, I can't even put it in my chart. So from there, when it broke out, it was gone. 872. How do you stop this? Like, look at this. We had areas from the past, like this block right here. It just cut right through there. Here was the 940 block. It cut right through there. It traded right up to almost $1,000, $990, and closed with the majority of that volume. And there's the high in after hours. So you can see right there, or sorry, pre-market trading. There's 4 a.m., 1 hour after London. There's 5 a.m., 6 a.m., 7 a.m., 8 a.m., and then we start to move our way down, 9 a.m., and then 10 a.m. where we are right now. Okay, so with all of these zones, now I would now make the opposing color. So this maybe, in fact, may represent support going forward. If it does pull all the way back red, maybe here, this is where maybe there could be a potential bounce by opportunity, like right now how it's coming down. If it in fact comes all the way red down in there, that might be one opportunity to maybe grab those pending orders and bounce out of there. It might bounce out, might come back down. Do we have two bottoms in here? Remember, two bottoms are stronger than just a single bottom. And then maybe with added volume, we create that. And then maybe we're retesting maybe 1,000 a share of Netflix, or this resistance right in here. Okay, that is just, again, one scenario. What happens if it comes down here but doesn't hold this block? Then we have our block right below us. And this was from previous day's analysis. So if it can't hold here, then maybe inside here. So if it continues, maybe cut through here, close red below here, then it comes up green. This box again, we make it red. Trading into there, it's red, and it gets rejected, and then maybe it makes its way down here. Then maybe there we find our big buyers, and then it steps up. Maybe here it double bottoms, and then we go. Okay, I don't know until the volume tests down here. That's where I make my first judgment call. If this can't hold, then logic tells me it's the next block. If that block can't hold, then I just continue with this block. Okay, I know the chart looks really ugly right now because that was a dramatic candle right there, so it kind of throws everything off. But what I would do is maybe like all of this stuff, you can start to clean it up now. You can start to remove. We're well away from 880 currently. So do I need all of this? I can right now, like I don't want to waste time on this call, but I could tidy up my chart, clean all this up. That volume has really moved out of there. So now we got to start charting up in here. Okay. So any questions about Netflix? And if you want to find some news about it, like any platform, this is Yahoo Finance. Click on Netflix. Let's find it. If you don't know where it is, then just put the ticker name in. So let's do a quote lookup. There it is. NFLX, Netflix Inc. Here it is. So it should bring us up a chart over here. So this is how it's trading today. It opened at the opening price is right here. Previous close, you can see previous close just under $870, and then look at the opening price. It's like Walmart pricing, just under $1,000. $997.66 was the opening price. Okay, and it moved from there, created a high of the day of over 1,000. So if you want to look at the 5 days, you can look at the last 5 days, and this is how Netflix was kind of consolidating, leading into the earnings, and then there's that big push, and there's all the volume up there. Okay, so it got up to I want to say 1,006 or 7, but there's your moonshot. And then if you want to read some articles on it, here it is, like 12 minutes ago. This one was just released. Is Netflix expected to post impressive earnings this week? Netflix jumps AI investments. What else we got here? Netflix stock breaks out. What's next for streaming video leader? Netflix stock soars to a new high after the best subscription quarter ever. The best subscription quarter ever. Remember we were saying yesterday, do people still subscribe to Netflix? It keeps going up in price from, I remember I was paying $6.99, $9.99, $13.99, $16.99. I believe I'm paying right now $19.99. I still haven't canceled it. I don't watch it as much as I used to, but definitely I watched it on Christmas Day because I'm a big NFL football fan, and they were playing 2 of the NFL games. So I was watching it. I was subscribed. I was dialed in. The Tyson Jake Paul fight, it was only available on Netflix. They have now, we were just talking about the WWE, World Wrestling Entertainment. They have other things, other popular series and things like that. And I think what they're forecasting and forward guidance is they're going to have more and more of live coverage. So maybe it was just a start for Christmas Day to test out their NFL games. Maybe they're going to get more NFL games going into next year. Maybe it's not just going to be NFL. Maybe it might be NBA. Maybe it might be basketball, hockey, different sports. Maybe it might be international sports. Maybe it might be European football. Who knows? But maybe that's the pivot they made and caused a lot of subscriptions. They hit record subscriptions. I think it was 21 million in that quarter that subscribed. So it was massive. I didn't expect all of this. I expected it to be pretty good, but not like knock it out of the park, flawless earnings. That was unbelievable. So, but if you want to read up on all the articles, they're over here. You can continue to read. You can listen to analysts and all of that giving their report. Okay. So guys, for today, would you like me? What would you like me to do? Oh, MicroStrategy. I just want to break that one down as well. Okay, and then we can get into. I want to show you guys like Tesla. I want to show you guys what else? AMD. I want you guys to get familiar with just a couple names, maybe add them on your watch list and something to keep an eye on, because I will be keeping an eye and I will be trading these corporations, and then gives me something to talk about. So over here, guys, I took a quick little scalp on this corporation, MicroStrategy. Just want to show you guys my thought process, why I took the trade, why, where, and how. And right now it is dropping on the hourly. So thank goodness I got out with some profit, because I don't play these would have, should have, could have games. Yes, yesterday maybe I left a little bit on the table, but I was happy. I hit a daily goal. Today I hit a daily goal. But now looking back at it, had I not done anything, I would have gave back my 2% profit and maybe possibly hit a stop loss if I didn't have a break even. So you guys got to understand this stuff. Don't let it haunt you if you get out in profit and things like that. So I'm breaking it down to the 5 minutes right now, and I want to show you. Here's the official receipts over here. This is how it looks on my TD Ameritrade when I'm trading. So here was today's scalp, 2%. Remember what I say, try and hit 0.5 or 1% as a daily goal. If you exceed it, that's great. I exceeded mine with 2%, and it netted $770 US. So when I convert that to Canadian dollars, it's well over $1,000. That's a great day in the markets. It was one trade, that's it. I haven't traded anything else, and I'm happy. I don't need to trade for the rest of the day, and I could be done. But that's the power of capital and understanding the power of percentage gains. And I'm not looking for a 10% gain. I'm not looking for a 100% gain. Just a 0.5, 1%, 2% is bonus. So here's how it looks. Let's take a look at how long was I in the trade for. So I'm just showing you a scalp, how you can scalp, just like how you do scalping Forex, you can also scalp the stock markets. So over here, I took the trade at 10:03. I waited for Wall Street to kind of settle down, 9:30 to 10, and then I started, you guys know, a new 10 a.m. candle. I wanted to see what was going on. So I saw the lower time frames approaching a support level. So I bought a pullback again. That's what I'm doing over here. I'm buying pullbacks in supporting areas. I'm not shorting the security. This account is strictly for buying and buying only. I have multiple accounts where if I'm shorting, if I'm doing option shorting, I use a different account. If I'm just going long on positions, I use a separate account. So I want you guys to get in the habit of having that. It makes trading easier. So I know if I'm just using this account, I know exactly what I'm doing. I'm not going to be looking to short companies. If I am, I'm going to be using my other account. Okay, so there is a method to the madness, but you guys will figure out what works best for you. I'm just telling you how I do my trading. Okay, so this was taken at 10:03. You can see I closed the trade at 10:15. So I wasn't even in this trade for 12 minutes and hit the daily goal. So again, just walking you through the ticket. Here it is. I bought, again, 100 shares. I don't know. I like buying 100 shares because later on, if I do want to do covered call options on this, if I get a buy and it's a really good buy, like at 378 and starts moving to 400, 410, and I'm really, really in the money, then I can use the option of doing a covered call. So I always like to start off maybe positions at 100 shares because it gives me that covered call option to secure more premium income coming in. So that's why sometimes I buy blocks of 100 on any security I'm trading. So someone asked me, Ron, why do you pick 100? Is it just a number? No, it has to do with the covered call options. Okay, but sometimes I buy 200, sometimes 50, sometimes 10. It doesn't matter. Okay. So I got filled again. I didn't use a limit. I wanted to get filled right when the market came down there. So I put a market execution in. It filled me at $378.76 per share. So you multiply that by 100, and that's my total capital I put into this trade. And then when I got out, okay, I put a market execution. I didn't put a limit sell in. I just put a market execution. I was selling in that bullish volume as it was moving up into resistance. Could I have got a couple extra dollars? Possibly, but looking at it now, how it's dumped since then, I made a good call, securing profit. So I exited the trade at just under $387 a share. So I bought in at 78.87. And you do the math there, it's like an $8 move. So $8 times 100 shares is approximately just under $800 US minus those commission fees of $9.99. Okay, and then you get the official receipt, like when you go make a transaction. Here was my buy of that price, that 378. There's just shy of $38,000, and when I sold, there's my commission, and then you see what's the net profit, 38,657. That's where I sold at 387. So if you minus this from this, you will get the net profit, which was just under $800 US. Okay, so 2% was of this initial capital. So the 2%, my day, like where I exceeded over 1% of the daily goal, was just trading with this $38,000. So that's more than enough for me. You know, like when I first started trading, I was dreaming about making $10 per day. $10 per day, because I was trading with little micro tiny sizing. So to make $10 a day was a dream come true. And then I always multiplied it by, there's 252 trading days in the year, Monday to Friday, not including weekends and federal holidays and things like that. So I always started to think 250 days, if I can make 10 bucks a day, that's pretty good to get started. You're making $2,500 to get to know the markets. And then my goal was to always add a zero. That was what it was my goal in the markets, to always add a zero. So once I got comfortable and I grew some capital and I got experience in the markets, my next goal was to make from $10 a day, it was to make a dream of $100 a day. $100 a day at that time was life changing for me, because it helped pay for a lot of my bills, helped pay for my cell phone, everything, just buying food, paying for a lot of things, your day-to-day stuff, paying for gas. Because making $100 a day, and some of you guys are well there and exceeding it, then remember, there's 250 days, trading days in a year. That is an extra $25,000 of income for you and for your family. And that's nothing to, like, that could be you're doing it on the side while you're working, you're going to school, you're doing everything. It's just a supplemental income. Okay, maybe then your next goal is to hopefully get the comma day. We call it the comma day, 1,000. That's the $1,000 day. The comma day, you know, like if you're doing that, I added a zero and I said, oh my goodness, imagine making $1,000 a day and timesing it by 250. You could potentially turn what was 2,500 to 25,000 to $250,000 a year, and that there is life-changing money. And you can still have it as supplemental income while working and while going to school. Just if you want to retire and if you want to do it, that's your decision. But just telling you, just it's a game of mathematics, it's a game of compounding capital, and it's a game of just adding a zero to your total. Hopefully some of you guys have a dream of making 10,000 a day. Who knows, maybe some of you guys will, and then you can go to 2.5 million. But it all starts with $1 a day, and then just add a zero and go from there. Okay, so 10 and 10.15, the chart, this is exactly what I was looking at. And again, I'm going to be full transparent with you guys. I was not trading where I am trading right now here in my trade station. I was on the road. I was in the car. I make my levels, and I also have them on my mobile. So sometimes I'm not always trading at the comfort of my home and at the trade station here where I can see multiple monitors and get other depth of market information. This was on the go. So, but what I did was, like I said, I allowed 9:30 Wall Street. So I saw it was a big green candle. It came up. Where did it come up to? Hourly white line. They rejected it back down. It came into my green box, and then I see that there was some initial support where it pushed right out of there, but it couldn't really break out. It didn't really get that next move. So it came down at 9:55, and then you see here going into 10 a.m. I always say, guys, always, whether I'm trading Forex, whether I'm trading the stock market, whatever it is, when you have a new hourly candle, there could be a shift in momentum in the market because you got new trading volume. You might have hourly traders, you might have swing traders coming in the market. 10 a.m. is a very important time because it represents, for most securities, a 4-hour candle that opens. So I saw right here, 10 a.m. Look at how it came down, and what did it do? It took out Wall Street's low, 945. So the same analogy we use with Netflix, now you can see how they do it with 5-minute candles. Sorry, let me just go full charting over here. So if I just show you, like right over here, that was 9:45, very important time in Wall Street market. That was the Wall Street low. Okay, and then you see right there, what is below Wall Street low? Just because it's on the 5 minutes doesn't mean that there's not pending orders below there. There could be lower time frame orders waiting there. So you guys understand? I showed you this on Netflix, how it represented with a whole hourly candle during earnings, but why can't something like this happen during Wall Street market open? So I picked up on this. Well, I was watching to see what was Wall Street's low. I saw it was around $378. You can see right there, 378.60 cents. And I saw how they took out the low, and then as it was coming up, I had a market execution to get filled on this wick. So I got filled in here, and it came back up, put me in profit, and then they gapped it up. Remember what we were talking about yesterday? The gap up candles. So they gapped it up, and then it initially came down red at 10:05. To what? Why did it come down? It came down to fulfill that gap. It came down to get the remaining pending orders that were in the market. I could have waited till 10:05 to execute. Okay, I could have got in on the next candle, but I got in on this one. So I can't look back and say, oh, I should have done this, I could have done that. Why didn't I do this? Because you got to do everything in the time of the moment and what you do, and then go back and review and execute it. So now when I'm reviewing this, I see it came down, it held a higher low and pushed up. So I was part of this bullish candle coming up right up there. I held through this green box, and then mark 50% of this candle, 381, 380, that nice psychological area holding. It did in fact come down, but still holding more than 50% of the candle. And then this candle is what I kind of executed on. 1010 coming all the way up. I saw it was breaking. What did it break? Wall Street's kind of that 945 candle, and it got all the way up to 930 right there, and it broke right through it. So broke right through it. And what's above Wall Street's high? Liquidity, right? So look at what they did. They came up green. Thankfully, 10:15, this candle I got out on at 388. I got out right at this resistance. See right there? I got out right there. Woulda, shoulda, coulda. Did I leave a little bit of money on the table? Yes, I did. But in fact, if I got greedy, look at how the market would have really taught me a lesson. It would have came down. Look at that. That's a nasty shooting star candle closing right at the low. They gap it down, ignited red, and keep bringing it all the way down to basically where I entered the market right there. So you see how everything can happen exactly like Forex, and it can happen in the stock market. Okay, so this is where I've learned to trade like a robot. I cannot preach and teach this enough. I don't worry about what could have happened or what should have happened, because I look at a situation like today. If I wanted more, I would have literally pissed away $800. So when I look back at it, you know, like there's nothing wrong with securing profit at specific levels. There's another way you can manage it. You can obviously leave runners. You can do a break even. You can do what you can do. But I unfortunately wasn't like at my trading station to really do. So I was happy. Daily goal, boom. Tony, you would have lost it all. Greed is not beneficial to nobody. No, because I suffered from greed from day one when I started to learn the markets. And I promised myself I'm never, ever going to do that again, because I struggled for more than 3, 4, 5 years where I couldn't figure out how to do this. I was getting in nice profitable trades, but I just couldn't keep the capital. I didn't know how to manage it because I always, when you see nice big green candles, you want more, you want more, you want more. Sometimes you might be adding more and more positions up here, and then the market might humble you down. But do you see, guys, like if you record kind of Wall Street's high on either the 5 minutes or the 15 minutes or the 30 minutes, and then pay attention to those levels and see, do they take out the liquidity up there? Do they take it down there? Because it might give you a clue as to the direction. Like this would have been a good opportunity as well. Like I'm looking back at it now, in hindsight, I didn't do it, but see where it came up there, I could have secured profit. Maybe if I wanted to short this thing down, I could have then looked at the option chain and looked at maybe right inside here, I could have 385 put option, the 383, maybe back down to the 380, and I could have shorted it back down and made some money coming down. Okay, but that's if you want to do that, there's options. But the candles tell you the clues. Look at this clue. Like this was a green king candle that broke that. Look at the wick. There's barely any wick. So it opened green, ignited. This was an ignited candle the way it opened. And it just took out that high and it drove. Look to the left. It was green, took out those wicks. Green. There's 9:30 Wall Street market open high on the 5 minute, that 389 level, and it broke it and went all the way up to 390. So that's basically our high of the day right now, like high of Wall Street right there, 390. And look at what's happened since then. It was a nasty shooting star candle coming down, and look at close red below the structure, and now we got confirmation of the big red candle right here, and now we're continuing to push down. We're trading choppy right now, consolidating. You got red, green, all this garbage. You can trap all this shit in here, and we know we're smart. We know that MicroStrategy is not going to just trade in this consolidated box. Maybe it might start looking to break 375. Nice psychological strike price. We're 10 cents off of it. 374 and 90 cents. So every time it peeks its head up here, it comes up there, hello, and it gets pushed right back down. It comes up again here, 1125, hello, and then they push it right back down. But now, can we officially get a green candle that officially closes above here, and then maybe we follow this volume? We can definitely record where's 50% of it if there's any pullbacks that continue to drive. You're looking at your RSI. There is a little bit of bullish divergence where the strength is slowly increasing, but we need to get confirming price. We don't want to just get faked out again, where maybe it comes up green, and then they reject it back down. That could definitely happen. So right now, if I would be looking at levels above, and then I would be just looking to maybe fill back up to 379, 380, to fill back to the morning price from 10 a.m. And then if you get your ruler, if you can't do the math in your head, coming up there, it's about $4 per share. So again, if I scalp this thing and I decide to buy 10 shares and I make a $4 move, I make $40. If I buy 100 shares and I make a $4 move, I make $400 US. And I could be in and out of that trade, or I can manage it with a break even. I can maybe take partials out up there, because now remember, this big green zone is not green anymore. We are trading below it. So this might be a big block of supply. And if it comes back up green, it might be coming right back up into supply and go back down. So you can see kind of it's forming maybe one leg coming down. It came down. We're trading right in here. Maybe it does come back up there and then maybe get rejected and we come back down. Then will it form a higher low right there at the resistance turning to support right there? Or will it in fact come like a double bottom back down in here, and then we make our way back up with more volume to try and break this big red supply? And then will MicroStrategy start to make its way back up here? Or will it just continue pushing back down? Okay. As I'm speaking, we're getting the breakout candle. What time is it? Noon. We have a new hourly candle open. Okay. So technically, we never had a green candle close above. This is just the opening candle at noon right now driving. So when I say it did any volume close above here on the 5 minutes, I have to wait for this 3-minute candle to close. And yes, the security can break out even further, and I missed that. I missed that candle. I missed that bus coming out of here. But when I'm looking at it now, should I buy the high of the candle, or should I officially wait for this candle to give me confirmation that it can close above this resistance? Maybe I'm already looking at below me, figuring out where's there a nice fair value gap in the market. Maybe if I'm looking for a pullback buy, I'm starting to put my supporting area in. I'm starting to put my box in there. Like just looking over here, and I want to see if this will hold up. Right below these wicks, those 4 wicks, that took 20 minutes to create. Remember, these are 5-minute candles. So right below here, you see it came down, wick, came closed right above that green box. It came down again, closed again above that green box. It came down again, 3rd time, picked up liquidity, closed above that green box. 4th time, came back down, closed above that green box. And then they really hammered it down. Now we're continuing to come back up. So if I stick with this green box and bring it into the future, okay, now if anything pulls back around here, just below 374, 373.50, maybe that might be where there is some pending orders in the market waiting to buy. So if I in fact missed out on this move, then maybe I got to patiently wait to maybe get back in if it pulls back into here, and then maybe go back up. Okay, so do you guys understand what I was just saying? And if you want to learn impulse trading, with intuition and conviction, maybe there is a time and place to take an impulse candle. But what you can do is you can scalp these on 1 minutes. Like the beauty of this trading is once you learn this, you can go to the 1 minutes. If we bring this into the 1 minutes, here's how they look. So we did officially get a 1-minute candle at noon, at 12 p.m. Close. And then look at your next 1-minute candle. It's a gap up. They gapped it up above the 1-minute high. Look at that. That was the high of that 1201. We start ignited candle right above, and then there's your pop, and we're just breaking structure to the left. All of the 1-minute resistance, 375 over here, 376, coming back up to 377. So you see the 1-minute candle just broke through that prior low and came back down, but look at, they gap it up and continue driving. Okay, so we just missed out on a scalp right there. We just missed out on a scalp on the 1 minute, but the 5-minute candle, if you're still a 5-minute trader, we're waiting for the next 20 seconds for this official bar to close. So that's why everyone asks me, Ron, why do you like scalping or trading this security? For the sheer fact that it moves like it's like you're trading gold, like it moves like you're trading US 30. And I enjoy trading the stock markets because the fills are immediate. There's no slip, not real slippage. This is your trading. Another thing here is you're trading with your real money. So you keep 100% of the profits. It's not like when you're trading with a prop firm, there's a profit split and things like that. And then there's rules that you have to follow. With the stock market, it's your own rules. You are your own boss. Like I don't have to adhere to, can I trade the news? Can I not? Do I have to jump through hoops and all these things to follow all these rules? No, I don't. The only rule that you have to follow is the pattern day trading rule. And that's what we talked about at the beginning of the call, is maybe at the end of the call, last 15 minutes, we'll kind of go through maybe some brokers or some platforms for you guys to maybe look at, do some due diligence and see what works for you. But see that 5-minute candle, how it closed near the high? We got another ignited open, so maybe it wants to drive a little further. But if it pulls back, not only do I have the green box there, but I also have this closing green candle with substantial volume. So first thing I'm looking at is where's 50% of that volume? Right there. And then you can kind of see how it was closing price of that big ignited red bearish candle down there, and we're at 376. So maybe if it comes back down red, maybe 376 will hold support, and maybe in fact we don't get down to this green box. But you see how it consolidated here, and the three directions, The three directions, we know this from day one. If you've been here with SST, you know the sniper trap and gap. It's a really good indicator that we created here, and you trap the volume, which we did here, and we know it's either going to continue to move in here. We could stretch this consolidated box into the future. Then it's just accumulating more and more and more volume. Both sides are accumulating. Sellers are accumulating and buyers are accumulating. At some point in time, the volume is going to spill out of here. It's just like when you're pouring coffee in a cup. If you keep pouring coffee in the cup, it's going to spill eventually. So this is volume. It's the same thing as coffee. This is our coffee cup. It's accumulating and eventually it will spill out. It only has two other directions where the coffee will spill. It's either going to spill to the downside if the sellers gain control and squeeze those buyers, then they move it down to the low of the day. Sorry, this was the old low of the day. I didn't do a fresh top down. And then if we do get, the only other direction is to the upside. Okay, but we didn't get the close with a retest. But sometimes if it's accumulating here, it's building. There's other clues. You can use like this indicator too that was showing bullish divergence. So it had a higher probability that it could lead towards the upside. Okay, do you guys understand that? And it's when you understand this and then you understand the fake out principle as well, then you're really strengthening this sniper trap and gap, because it's not always just gonna go down red, close, retest, and drop. What happens if there's this, the liquidity grab? That's the clue. Then maybe if it comes down red, gets breaks this consolidated box, breaks, catches a wick, gets those pending orders, and then all of a sudden it's coming right back up and it trades and then it's gone. So that's your traditional head and shoulder pattern. There's your left shoulder, there's your inverted head that took out the liquidity out of the market. They took out the pending orders, they got the volume, and then now it's just building the right side shoulder that technically has a high probability of breaking out to the upside. Okay, so that could have been scalp number 2 on the day, but again, I hit my daily goal. So Ron, as much as I want to get in and trade here, if I see an actual real setup, like if this closed right here and retested, I probably would have got in, but this one just kept driving and waiting. Okay, so did you guys see in live action right now how you can do the same thing? If I just took this name, this watermark off, and I just put XAU USD, if I put US 30, if I put US crude oil, if I put GBP USD, you guys would have no idea what I'm trading. Do you guys understand what I mean? This all looks the same. This is all red candles, green candles, consolidation candles. It's got some support areas, some resistance areas, some supply, some demand zones. That's the beauty of price action. Once you learn this, you're set for life. Okay? Does that help, guys? Do you have any questions? Because you're going to see this pattern quite often in your trading. So if you don't understand what I just said there for the past 20 minutes, now is the time to ask a question. Otherwise, I assume that you understand this, and I don't have to keep repeating myself over and over and over on the same stuff every single day. This is where we can take our trading a little bit further. Do you guys understand this concept, right? I'm going to assume you guys understand this. I don't know if everyone does. Okay, so guys, I want to take some look at some other securities if you guys don't mind. Okay, there's some other good securities that maybe we should analyze. AMD in particular. Can we look at AMD? Okay, so if you're unfamiliar with how to find these securities, if on TradingView you come here, we're looking at stocks. Okay, so we're not in the futures, we're not in forex, we're not in crypto, we're not indices, bonds, economy, or options. We're stocks. So you can write the candle in here, or not write the candle. You can write the name of the security. You can write the ticker AMD, or you can start by writing advanced. You know, if you don't know what the ticker is, advanced micro devices. There it is, the first one. So you see here it's AMD, there's the logo, Advanced Micro Devices Inc., and we want the one that's trading on NASDAQ, the big exchange. Okay, so we add it to our watch list. Should be at the bottom of your watch list right over here, and you select it, and we're in the charts. Okay, so this is AMD. Anyone familiar with this company? What it is, what it does, what is this? Go back to the daily over here. Okay, if you want to read a little bit about the company, Yahoo Finance can give you useful information. Again, here's AMD on Yahoo Finance. We can start to see, okay, the previous close, 122 and 28 cents. That was yesterday's close. It opened a little above the closing price, 123.04. Okay, and it's days range today, so we have a low of just under 122 and we have a high of 125 and 65 cents. So we're trading a little bit off of the high of the day at 124.11. And our 52-week range, this is what I want to focus in on. 52-week range, so this is the last year's trading, last 52 weeks. Look at the bargain, look at the low of the 52 weeks was just under $115. Okay, so that if you got in at 115, that's a fantastic. You can't get any lower than that. And right now it's trading $10 above that at 124. So anyone that bought the 52-week low is up $10 a share right now if they're still in. But look at the high. Okay, the 52-week high. This was trading at $227 per share. So you see, we're basically almost $100 off of the high. Yeah, $100 off of the high up here. Okay, so this is what I mean. There was a nice discount of a really nice company. Okay, so if we look at the company, this is a company with that's market cap is $201 billion. Okay, just over $200 billion. Okay, so and then look at the average volume. So this is an average volume that's traded within AMD is 37 million over here. We are below the average. Here's today's current volume of just above 17. But remember, we still have a couple hours left in the trading day. Will this get up to 20? It's still trading maybe below average, but could be in an accumulation phase. Okay, so you got your market cap, earnings date, February 4th. Okay, so we're a couple weeks out of earnings. Okay, so that's another thing. Like if you were following Netflix a couple weeks before earnings, start to look back and do some research. So think about the last quarter. For any of these corporations that are reporting earnings, think about the last 90 days, the last quarter or quarter over quarter. And think back. Like with Netflix, you could have looked back last quarter, like what I was saying, Christmas Day. And Netflix had those two NFL games. The Mike Tyson, Jake Paul boxing fight, bringing WWE entertainment into, and then all of the other series and comedians that they have on there, and all of the other shows, and but you can kind of go back and do your research. So the same thing with AMD. Go back and see when it hit like 52-week range, the 52-week low. When was it? Was it just recently? Are we talking about 6 months ago? How did it react here? What was going on? Okay, and then any news about AMD? You got some news here. You got some articles that were just released a couple hours ago. You got some that were released a couple days ago. Advanced Micro Devices, Intel could report inline Q4 results amid PC headwinds. Okay, Citibank lowers AMD's price target to 175. Okay, they lowered their price target because they had it around 200, but they lowered it to 175. Still, once they lowered it to 175, we're trading at 124. So there's still a lot of upside to get to 175 with these analyst targets. So it's AMD is a corporation that is all about chips, microchips, computers, AI, all of that stuff. This is kind of, you want to add this to your watch list for if you like technology. If you like NVIDIA, if you follow NVIDIA, add AMD. They're very similar at what they do, but they are different in ways. So they do your processors and graphic chips, Q3 results. Is it undervalued? Near the 52-week lows. That's what we look for. We look for value. So is this company undervalued right now? Like we had analysts even, they lowered their target to 175, but we're trading at 124. So it's well below it's a good value if you ask me. It's just, do we get in now at 124? Should we have got in at 120? Was 115 a good opportunity? Will it come back down? All of these questions. So that's why we can't just do this with just talking. We have to go to the charts. We got to actually do a top-down analysis and figure out the levels. When did it make the lows and things like that? Okay, so all of your news is here for you. You can spend hours and hours of reading these articles, getting familiar with your security, but that's what I say. Don't just trade a security because your best friend trades it or your neighbor trades it. Trade a security that you're passionate about. You're willing to follow the news every day. Maybe you're interested in the gaming. Maybe you're interested in computers. Maybe you're interested in technology. Maybe you're interested in tech and chips and all of this stuff. Maybe this might intrigue you. Maybe you got some passion. Maybe you have a background experience. You know this stuff. I don't know computers too much. I'm not into technology. So a lot of you guys know tech way more than me. So you guys are at an advantage over me because I don't really know tech. Someone was telling me, Ron, they got this new graphics computer and this and that, and I'm like, I don't even know what you're talking about. I don't know. There's things that I know, and then there's things that I don't know, and I understand. This is not like something in my expertise, but maybe for you. So maybe add tech to your watch list. Okay, so AMD. Let's now go to the charts and take a look at how this thing is trading. So I'm on the daily now. Okay, so higher time frame. Look at it. Okay, so when did we really peak? Right there, March of 2024. There was that high of 227. Okay, so we're nowhere near that. Look, since then, March 24, what's happened? It came back down. It came back up all the way there. Look at all those rejections. Look at all those wicks up here. What the hell is going on with this range up here? Like, if I just place one line here, right here, what is going on at this price? See here, you got 3 wicks, guys. Okay, it came up there, 187, back down. Came up, tried again, 187, tweezer top highs, back down. Came up a third time, 187. How many times can Shaquille O'Neal reject us, and then we get tired of keep buying and he keeps rejecting, and then the market dumps? Good opportunity to look for sell side, to look for puts on AMD when you have those, and then we verify it by looking back, and then you see again in April 1st, 2024, it came exactly and got rejected again. It came up there again. They gapped it up right to that 187 and dropped it. What is going on with 187? So I just showed you 6 hard rejections at 187. What should we do there? Part of analysis, what should we do there? Should we forget about this area right now and say, who gives a shit about 187? Like, it's not important? Shaq type blocks. Yes, Tony, this is big Shaquille O'Neal. What do we do? But we got to do something, guys. We have to. I'm waiting for you guys to tell me what to do because I know what I would be doing. What do you think we should be doing there? The market is telling us something. It's telling us right now. It's like, I don't know how much more clear to make it to us. What do you guys think? Lisa, Microstrategy has been around since 1974. Holy shit. Aaron, sell limits. You could. I'm looking for something else. I'm going to give you guys a couple more minutes. Red box, Lisa. Shit. You got it. Oh, I love it. Paying attention. I love it. We got to put the supply box there. We have resistance, 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 right? When we have multiple resistance, it might form supply in the future. Let's put our fancy red box. How about, Lisa, we do like a notch above and a notch below the white line? How does that look? If Lisa agrees to this, then we'll verify it. Okay? Does that look good? So I came down to the bodies right there, the body, and I'm not done there. Let's stretch it into the future. Okay, but you see how we established our first zone of supply. There's one top, 2 tops. What happens if it, who knows, if AMD has a run rate and it comes right up there, maybe it goes back down. Maybe it forms 2 times here and goes back down. Maybe it drives all the way up there and actually goes through here and closes above. Green, 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 green. Break through. Hello, we're up here. We're in the 190s. Close. Then we flip that zone, same zone. We don't touch the zone. We just change the color. Make it green. What if we pull back and this is now turned to a demand area, and there's a lot of interest to buy here and take it back up to the past 200 to the highs over there to 220. What was it? 227. I didn't see. What was the high? 227. Yeah, up there. But do you guys understand? We've found a zone. Okay. I know it's way out of the money. It's the price is nowhere near this, but this is how it starts. This is how it starts. You found multiple resistance, and then you bring it into the future. Another thing that we've forgot was, why don't we create an alert at that white line inside the box? I'm not going to be monitoring AMD every single day for the next few weeks. I got other shit to do. But for now, what we can do is right click it, go to settings. Oops, not settings. Right click it over here and go to add an alert. Create. Bada boom, bada bing. There's my alert in the red box. If it ever comes up here in the future, guess what? I'm going to get alerted. I might be ready to make a potential move at this area. Okay, so what did the analysts downgrade it down to? Do you guys remember? Citibank lowers Advanced Micro Devices Inc. price target to 175. Okay, so does that make sense? So what is Citibank's target? 175. Right there. Right below supply. So what happens in fact if it does come up green, 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 green in the near future, then 175, that's the analyst target. It might have a little impulse break above there, but look at where it's trading, right into the red box around 187, 185, 186. Maybe it just comes like kind of towards the analyst and then kind of consolidates there. Maybe it might makes its break there. Who knows? Maybe it's a fake out and then they drop it. You see, guys, how my brain operates? It operates different from most people. Like, I always think of what could have, what might happen, but I don't play the woulda, shoulda, couldas. I analyze my charts. I get it ready for if the volume comes here, I'm ready. I'm ready to figure out what's happening up here. I'm ready to trade it. I'm confident to trade it. I'm not scared. You know, when sometimes you get scared and things like that in the markets. No, you've done analysis. We figured out in the past how. Look at, like, just stretch it to the left. You can see that it was a nasty kind of fake out to the high right up here, where they faked up the high, and since then it retested it. There's your shoulder, dropping back down, came back up. See where it got rejected? 175. That's where our analysts are putting the target, okay? But since then, it's been dropping, took out the low, and now maybe are we getting ready to maybe potentially come back up? But we're fighting lots of resistance. If we're looking to buy AMD right now, we're still buying against resistance. We're going against the trend. Because if you look at how the trend is moving, it looks like it's still sloping down. Okay. Guys, do you guys follow like what I'm doing here? Does it make a little bit of sense? I know you're probably saying, Ron, what the hell are you worried up here for? This has nothing to do where the price is. Are we not trading today? Are we not scalping? You know, those common questions I get a million times. But what I'm trying to do is get you guys thinking long term. I want you guys thinking that prepare yourself for having your charts ready, and then on a daily basis it takes 20 minutes after to continue to review your charts. But this is way away from the money. We have other zones to consider. Okay, so we're ready if it ever does come up there. But right now we're trading over here at 120, just under 125. But we have other zones maybe. So you know, what we were doing yesterday, when I figure out a red box, I need to figure out a green box. We always got to find the opposite. I like to do it like this. When I'm learning a green candle, bullish engulfing, I know that it has an exact opposite red candle, bearish engulfing. Very simple. So I look at it as like the green candle is the brother, and it has to have a sister. It has to complement it. Okay, it's got to have a sister. So when you learn one candle, you can learn the opposite real quick. If you know it's a hammer candle, that's the brother. The opposite of a hammer is a shooting star. That's the sister. So when we figure out a supporting area, that's the brother. The opposite is the sister, the resistance. I showed you right there how multiple areas of resistance can turn into supply in the future. We'll see. Maybe we'll have this conversation in a few weeks, few months, few years. If it ever does come back up here, we'll have that conversation. I'll be like, did we not have this call on January 22 where we talked about this? Were we not prepared? Did we not have an alert up here? Why are we guessing? We prepared ourselves for this. That's part of the stock market, is preparing yourself for, not for today, not for tomorrow, but for weeks to come. We're looking for these areas and to trade off of these areas or invest off these areas. Okay, so I've found a supply. Now I need to find the opposite, the brother, a demand zone. So we got to find an area that is easy on the eyes, that looks like it's holding as support and might be considered demand in the future. Anyone want to help me out? Anyone have a demand zone, a number in mind? Looking at what we see here, can you guys help me out? I'll give you where I think, and remember, everybody is right. You know, it's just where you want to place it. I might place my demand zone just somewhere else than you. You might see another demand zone, but I want the extremes. I kind of want the extreme high and the extreme low, and then we start like a sandwich. We start going into the meat. So right now we got to get a hamburger. We got to get the buns. Okay, we're building a Krabby Patty. I love SpongeBob. My kids, my daughter's into it, so we're building Krabby Patties right now. We got the top bun up here, sesame seed bun. It's at this big red box. Now we need a bottom bun. What do we got? Noor, 115. Sergio, 112 to 118. Lisa, demand zone set at 52-week low, 115. Okay, 115. I'm gonna go with you guys. Let's take a look at the 115 area. Okay, so where are we at? 115s. Okay. The next psychological level. Okay, so you guys chose, right? I'll go $1 above, $1 below. One standard deviation above, $1 below. So 115 is, so we're gonna go 116 and down to I know it looks real small here, but 114. I'll make the box a little bit bigger, but that's generally what we're talking about right there, correct? You guys are saying approximately 115. I went 116, 114. Now, let's move to the left a little bit. Let's go back and just put it in, okay? So right there, I can see right now, maybe that's what you guys are talking about. It's hit the support area right here. So let's make it green. Okay, we don't want this red. We're going to make it green. And then we can kind of back test and verify it together. Why? By just looking to the left and dragging it to left. How did price action react at this level in the past? Okay, so let's continue moving it. Whoa, we got some context over here. What's happening over here? What happened November 10, 2023? This was a long time ago. Why is this guy talking about 2023? Are we not in 2025? What the hell is this guy doing? No, look. You guys got Noor, Lisa. What do we got? Sergio. Good analysis, guys. Look at this. You got a green candle that physically closed above this level, okay? And then look at the next day, okay? You got a retest. It came down red, 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 right to your green box. And then there is the gaps in the market, okay? Remember, there's gaps. You're going to see a lot of gaps in stock and equities trading. Could be from pre-market trading, after hours news. You saw Netflix gapped up huge. So all of these things, you're going to become more familiar. And sometimes the gaps tend to get filled. The question is, when do they get filled? Like that Netflix gap that went from 860 to 1000, when will it ever come back and fill that gap? It might not be today, it might not be tomorrow, it might not be a week, it might not be a month, maybe a year. But at some point, it will maybe retrace back down to fill that gap. I always go with 50% retracement. I start off with that first psychological area, and then I work from there. Okay, so you can see, yes, it physically closed above. We were talking about that. Has a candle physically closed above that zone? Yes. We have the exact date and time. We can go in and dissect this entire daily candle if we choose to, and then see how it moved away from it. But then look here, next couple weeks, these are daily candles. So it moved up there mid-November. Look at the transitional time when it changes direction, momentum. Now we're looking at the monthly. December, start of December, we start to see it come back down, come back down, come back down. Look at kind of almost, I didn't kind of retest the level and then start its way back up. Okay, so that's a good supporting area. Support, support. We look into the future. Look what just happened a few days ago, start of the new year. Same block. If you put it, same thing we did up here with the supply, if you put a line with a signal, an alert, you would have got alerted. You could have bought anywhere in here at 115 and you're trading now almost $10 a share. You're in the money. You're doing well. When we introduce options trading, guys, think about where I'm taking this. We're not just going to buy shares of a company. When we see options, oh shit, then the game really changes. Because if you know 115, then maybe you look at your 120 to your 120 strike price, maybe your 125, maybe your 130. And then if it's coming up there pretty quickly, your implied volatility is just, your percentage gain is just, your premium is just compounding, because there's more volume that wants to buy your contract off of you. They want to get in now. If you bought at 114, 115, they want to take it off your hands here at 125. You're well into the money because they want to take it to 130, 135, 140. Analyst estimates are saying 175. But with options, you got to kind of pick the expiration date. Are you trading weeklies? Are you kind of scalping them? Are you looking for the monthly? Look at a more conservative one. Look at the monthly expiration dates. And then you can kind of hold it a little longer and develop the trade. Okay, so going back with this. Now, let's not stop there. Okay, let's continue with this. Okay, so this is where I see it kind of tried to break above here. It's kind of choppy, mid-July. Again, August months, we told you guys, markets are very cyclical. June, July, and August, not the greatest time for stock exchange, stock market trading. Maybe sometimes we concentrate more on Forex in the summer times because the stock market, the big bankers, Wall Street, these guys are on their fancy yachts. These guys are vacationing all over the world and they're enjoying their life when they're making billions and billions and billions in the markets, okay? So they're not really concerned with trading in the summer months. So you can see, go back and back test. July, see how it was trading, kind of choppy. We broke down. It tried to come back up, but they slammed it down. So that's that choppy volume. There's no real structure. Those are those shitty days. Those are those days that can really get you caught up in trading. We want clean movements like this. We don't want to be trading garbage in here. And then you got to know also the months. Like, what are we trading? Right now, like, the markets are really amazing right now. The beginning of January 2025, Trump's in, there's volume in the markets, and that's why someone asked me, Ron, why are you trading Microstrategy every day and you're not focusing on Forex? Because how can I give up this clean volume trading in the stock markets? Like, I enjoy it, and I'm really focusing in on these corporations right now. MicroStrategy trades alongside Bitcoin. I'm following Bitcoin right now. It's back up to just under 105,000 after a retracement from 107. So I want to see, are we going to continue moving up from 108, 110, get to that 120 target, and see if we can kind of build a yearly, like a strong demand zone at 100,000, that psychological level. Obviously, we're going to retrace back, but the more and more volume we have above 100,000 for Bitcoin, we can build a base off of there, and it's got to start somewhere, So I'm not thinking of Bitcoin just for tomorrow or next week or next year. I'm thinking of it we've been watching this thing since 2009. So we've got to watch these big levels. You know, I want to see $250,000 a coin. I want to see $500,000. I want to see $1 million a coin. But you got to really build a base at these psychological areas. So I kind of watch alongside Bitcoin with MicroStrategy, because crypto is fun right now. But look at the gap. Okay, so there was a gap back here. Okay, where it took this big jump from $110 all the way to $115. So you see that gap? There's a gap. Like if I lower this, you can see the gap right there. So it's kind of fulfilled the gap. It's been pretty good. If you want to go all the way back in the past, you can see how it came in there, traded in that block 115, back down. Here it kind of closed with the volume above the block and then took off. Okay, so excellent. Everybody, for choosing that block. It's a perfect block. Okay, I could not have done it better myself. You guys, I understand, are getting it. Now, look at where we're trading. We're trading right at the trend. Okay, see this trend line? I know it's not exact. Did I place it at the wick? Did I touch everything? It's just a general trend line. Okay. But you see how we're retracing off of the block, we're coming right back up. Do we have now points of interest on the daily, or one other maybe zone to consider? I would put one more inside here. Just, I don't know why, but this is just, my gut is telling me to put a zone right here. Hear me out. Hear me out. Okay. See there, it was kind of, it came up there, they gapped it up, back down, came up, touched that, back down. Resistance. Here it closed above. There's the closing candle, a retest, back up, a retest, zone, back up. So let's stick with this into the future. I see some nasty shit down in here, end of August, okay, or sorry, early August, summer months, and then push out of here, pull back, retest this block, back up, coming again, touching the green zone, back up, touching it again, but we're below the trend line. You see how the offers are coming down? It's making a lower high. It's making a lower high. It's making a lower high. Continue with this zone into the future, and here's our today's pricing. So we're below this. So this is red. Easy peasy stuff. I took my kids to school today, but next time I'll have my daughter sitting in here, and she will be showing us the red and green boxes. Okay, she's good at doing this. She can teach all of us. 8 years old, she'll teach us the red box, green box game. It's the red box, green box game, I call it with my kids. Okay, so it's fun. Soon she'll be scalping the markets. Okay, now we got something going on in here. Now we're getting, see how the sandwich, the Krabby Patty, we're getting to the meat now. Okay, we got our top buns, we got some lettuce, we threw a tomato in there. If you guys like onions, throw some onions in there. Got a little ketchup, some mayonnaise, some relish. The secret formula. Okay, the secret formula. Remember that thing, plankton? That's what they're after, or he's after it, the secret formula, and he can't get it. I don't really understand the SpongeBob, but there's a secret formula, okay? And it's out there. We got to figure out the secret formula. We're getting to it, okay? So are we cool? You guys follow so far? What's going on? So you see we're trading inside here. We're trading below the trend. If you want to make a channel, okay, what's our channel? Right here. Just kind of connect the dots now. Connect the dots. You guys ever played connect the dots when you were a kid? Okay, I'm connecting right there, right there, right there. If it ever comes back down, maybe green box. You see how the green box is kind of maybe 50% of this channel? Okay, if it in fact comes lower, maybe we come down to the bottom. We sub 100. Sub 100 is right there. I guarantee if I look to the left of the chart, I can find a block at sub 100 because it's a psychological area. Look back in time. There it is. See what I mean? Guys, you can kind of predict everything naturally. There it is. Right above there. You can kind of see that resistance right there. Turn to support. The double bottom right below it, rather than the liquidity to take off. Bring it into the future. 100. Sometimes I don't even need to just create a box. I know that the psychological level is 100. I just said about Bitcoin, it's trying to create that big, solid yearly demand at 100,000. If it ever comes down there, I'm ready for it. Psychological 100, I'll put a buy limit in there. Hell yeah. If I can get AMD at $100 a share, I'll be bloating the boat and hopefully taking it right back up. That would be an amazing opportunity to get in there. That would be a discount. Perfect. But let's talk about what's going on now inside here. Okay, so we got gapped up candles, but whenever you figure a gap, just box in the gap. Right here, right here. Okay, right there, right there, right there. Okay, if I make it neutral, maybe you guys will understand what I just did there. But kind of see this little gap here. And then I look back, it kind of encaptured that volume and then brought it right back down. Look at the wicks, came right up there, back down. Came up here, back down. Came up there, back down. So this going forward is a zone. It's more of a immediate zone. This is more like getting into the money right now. So we're trading below it. So let's make it red. I'm really trying to consolidate the day-to-day pricing as much as I can and figure out if it's going to break out. Might break out from 127 and get us up to 133, 135. I would definitely be looking at maybe the option chain. If it's going to break out, close above, I'd be looking at those strike prices above us. But just figuring out the zone, the channels. So the overall trend of this thing is trending down. Okay, so remember, if we're buying against this resistance. So they can, in fact, continue to push this thing down. So this is now you got to ask yourself, are you maybe developing a position, like a longer position? So if you bought in a little bit here, and maybe if it pulls back down here, maybe you add a few more shares of AMD. If you believe in AMD, if you believe in tech, if you believe that we're going to start to break out, obviously, the more shares that you can accumulate, the more profit you can make. So always have these as levels to maybe purchase. So remember this block that you guys figured out? I'm going to put a line right in the middle of it. Okay, right in the middle, right there. And I'm going to right click and place my fancy alert. There we go. If it ever comes back down into this green block, I'm going to get a notification. If I'm at my trade station, it'll go ping and give me a notification. If I'm on my mobile, I get a notification. I get an email. Wherever I am, if I have to get a telephone call from Wall Street, I don't care how I get an alert, but I'm going to get an alert when it comes in here to tell me that AMD, it's at a discount from where it's trading at right now. It's at a historic demand level at a block. So what do we do there? We traditionally have to buy, but we look for clues. Is it going to just come directly right down to our green box? We get our order and then it just goes up? Possible. That's an option. Option is also what's below here. What is below here? Guys, same shit we do every day. There's not an eggplant below there. I don't know why Dave is putting these eggplants, but there is money sign down here. Okay? We know that that's liquidity. Okay? So if it breaks, it might come down to 110, but there might be a big, massive order waiting to get filled at 110. Why pay 115 if you can get filled at 110? That's $5 cheaper than, so maybe a big institutional block is waiting in there to get filled. This might be like retail pending orders. Again, it's insignificant to the financial markets. There might be a huge institution waiting in here, and you don't think that the market can see that if there's a big buyer waiting in here. So maybe they move the market down to pick up those orders, and then we make our way back up and maybe physically retest. Then that gives us the confirmation to go long down there. So multiple things can happen, but as long as we are aware of what can happen, and as long as we are aware that we have an alert there, once the price comes to us, we relax, we have a coffee, we got a Gatorade, you got a joint, and you're just waiting to see what will happen here. It's a game of patience. Warren Buffett said it perfectly. The stock market is a platform to transfer money from the impatient to the patient. You guys are stock snipers. You guys are very patient at this game. Okay? Don't do anything impulsive. If you do, just a feeler trade. Just test out the market. Get your feet wet. Don't just dive in and go all in, because things can continue to move down. Okay, so let's follow today's movement. I was saying 120 was a good, I was talking last week about 120 was a good opportunity to get in on AMD. I know Mano in our group, I think he started position at 120. That's a good area, 120. But if you missed it, you might come back down to 120. Why? Because there's a little bit of point of interest. So I'm not going to use the blocks anymore. I'm just going to use a yellow line, just right in here. Very easy, visual on the eyes. You see, if I place a yellow line, why did I place it right here? Okay, because I can see a wick come down and move off of it. I can see a wick touch it, move off of it. I can see a body break it and close right at the yellow line. I can see this low of the day touch that yellow line and move off of it. I can see this high of the day pierce it, close below it. I can see this volume gapped up, close, retesting it and moving. So it's a nice level. It's also a nice psychological number, 120. So that's a good point of interest. You know, like when we make our charts fancy, we write here daily POI. So if you can accumulate off of 120, it looks like it's a good area of support so far. 120.50 cents to be psychologically correct. Daily point of interest, and it's acting as support currently. Price is above 120. So if it does come back down, in fact, maybe we see if 120 is support. If it can't hold, will it trickle down a little further? Right there, you see that last body right there? I would have another point of interest at just below 118, because you can see where they gapped the market down there and then they just pumped it right back up. So 118, and you see how it's psychologically 50% from this yellow line to the top of the green box. If I place a yellow line exactly right at that body, right there, you see how it's pretty much right in between psychological 50% of that zone. If this in fact can't hold, then we're coming down to our green box. Okay, so that's how I kind of play it out. My levels, strike prices, areas to add more shares, I would be adding here. So if you're going to do a position on any security, you have to go into the trade with an expectation of what are you looking to get out of it. Is it just going to be a quick little 10-minute trade like how I did? Is it going to be a 4-hour hold for half the day? Are you looking for multiple days? Are you looking to take this trade maybe a couple weeks out of earnings and drive into earnings with maybe you're seeing what AMD since the last quarter, what they have in the pipeline? Are you reading any articles? Do they have anything that could cause something like Netflix blow it out of the park and continue driving? So this is what you got to kind of think about. The trade. Is it going to be a multi-day? Is it going to be an intraday? Is it just going to be a quick little scalp? These are questions that you have to know before you even take the trade, because then you got to now think in your mind, if I'm going long on this, for example, if I'm going long and I'm looking to hold for multiple days, like I'm turning this into a swing trade, I'm turning this maybe into a long position on AMD. Maybe I want to hold AMD to the 130s, to the 140s, to the 150s. Maybe I want to hold it to get to that analyst target of 175, and who knows that supply block up there. Okay, so then I'm not nickel diming with little 25-cent moves. I'm worried about the bigger moves. So then I'm thinking of capital allocation. So I'm just using hypothetical numbers. If I set aside $10,000 to trade AMD and hold it for larger targets, should I start buying right now the entire $10,000 at today's price, 120, just under $124, and go all in? I can go in. If I'm setting aside $10,000, again, and this number can be different for everybody. Okay, don't get too caught up on the number. Get caught up on the theory. Okay, it can either be 10,000, it can be 5,000, it can be 1,000, it can be $100. But if I'm setting aside $10,000 for AMD, okay, and if I lose it all, if it's gone and it disappears and I lose it all, will that will that cause me to do silly things in the market? Okay, maybe I'm only have $10,000 in my account. That's all I have. Is it a good idea to just use that entire 10,000 and just go right into the security? Probably not. And believe it or not, that's the biggest mistake that retail traders make, because they always think that, oh, I might double this money, I might double down, I might turn this 10 to 20 on a quick trade. No, it doesn't work like that, because opposite side, you could lose it all. Then what do? Okay, so you have to have some sort of plan. If I have $10,000 now, and let's say I have $500,000 in that account. Maybe $10,000 is a small percentage of the entire capital of that account. If you're trading with 1,000 and you have 25,000, 50,000 in that account, it's still, now you understand that it's a game of percentages. So it's all capital that you have. But if I was setting aside 10,000 and I felt comfortable with 10,000 on AMD, then maybe how do I want to allocate? How do I want to allocate? Do I want to buy maybe $1,000 worth right now? But then remember, if I'm making a position, I'm not worried about too much of the day-to-day drawdown, because I'm looking to add positions and cost average in. Remember that word, dollar cost averaging in. So for example, if I set $1,000 aside and I buy my first buy is right now, I put $1,000. Okay, so number one, how much shares will I get? Okay, let's do some math, guys. If I put in $1,000 and it's trading at 124, how many shares will I in fact have? We got to understand this, because some traders don't understand. 8, yeah. And if your platform allows you fractional shares, you'll have 8.06. Okay, so we'll basically have 8 shares. Okay, you're going to see on these reports over here, when you get your receipt back, it will say, sorry, over here, it will say not Mr. It will say AMD, the price it's at, action quantity. Did we buy those on limit order or did we buy those on market execution? And in quantity filled, we'll have 8 of 8. We got 8 shares filled at a price of $124, and it's filled, and we got confirmation, and we're in the trade. Okay, and if it starts to go up 125, 126, let's say it goes up $2, how much money will we be up total? So if we have 8 shares, and it goes up $2 in price from 124 to 126, we're up $16 in profit. Okay, but that's just how it works. Okay, so what happens if there's a pullback and it comes back down to 120? Okay, what happens if it comes all the way back down to 115? So remember, I set some money aside, so I got $9,000 more set aside for AMD to accumulate and to add to my position. So if I bought at 124 and in fact it comes down to 120, I'm a little bit in drawdown. Okay, so I'm down $4 per share. I bought 8, so I'm down $32. Is it a time to panic if we're down $32? Remember, we set aside a certain amount, so we don't need to really panic. If we believe in this security, if we believe in the continue to buy at these levels, then maybe we add. So then maybe we add, maybe you have a limit order or a market execution. If it comes back down to 120, maybe we purchase another 8 shares. Okay, so now we have 16 total shares. But now what would our cost average be? If we initially bought at 124 and we just added 8 more at 120, what is our cost average of AMD? Just, guys, real simple. 124 plus, should be very, very basic. 124 plus 120 divided by 2. What do we got? 122. Okay, so our cost average now is 122, and we have 16 shares. So if it goes back up to kind of 124, now we are up $2 per share, and we're up $32 in the green. Okay, it might consolidate there, and then it might give back those gains and come back down to 120, and then we're back to break even. It might give us another opportunity to add. Maybe it breaks, maybe it can't hold 120 and it drops, some news in the market, and then all of a sudden we get huge dump and it comes back down to 115. Now think about it. Your cost average is 122, it drops to 115. We're down $7 per share. We had 16 shares. Okay, so we're now in the negative $112. Again, is that a time to panic? Is that a time to revenge trade? No, because what was your initial plan from all along? Were you not going to add increment pending orders and allow yourself to cost average in? Maybe if it comes down to 115, instead of buying your normal 8 shares there, maybe you double up and buy 16 shares here, because you're getting it even cheaper than what it was. Okay, so so this is the way how you add positions, and your position might be bigger at a certain area than it is at another area. Okay, do you guys understand? Is this like, maybe I'm not explaining it properly, but this is all about position trading, positions. Okay, this is not just about getting in a trade and just boom, right to profit or stop loss. This is, you're accumulating. Just like when you watch the depth of market, big banks, institutions, they accumulate. Sometimes they go and draw down, sometimes they accumulate more and more and more. But the whole point is to continue to go with your original hypothesis, what you think is going to happen. There's sellers right now. Believe it or not, there's sellers who are accumulating because they in fact want to continue shorting AMD down. So they might be, when it comes up here, they're adding more sell orders, adding more puts. When it comes back up here, they're adding more puts and driving the price down. Right now, when it's trading, there could be more puts. You got to look at the option chain, look at the put volume to call option volume. Maybe they're anticipating to drop it down even more. So it's a battle between the two sides. Remember, you got short sellers that are trying to drive this thing down, and you got positional long buyers that are trying to buy this thing up. Okay, so that's position trading. And then another benefit about this, guys, now we've accumulated 16 shares. We've added 32. Eventually, hopefully the goal will be to get to 100 shares of the company. Now, if you're holding 100 shares of AMD, then you have the option of doing covered calls. Okay, so I'm just going to explain this real briefly, but I have an entire kind of boot camp and presentation prepared for covered calls. It's passive income. So what it is it's kind of insurance when you're kind of in drawdown while your trade is accumulating. So if we in fact accumulate 100 shares of AMD, let's say we got a cost average of 120, then what we have is the option to sell those at a premium with a covered call. We own 100 shares of the company, so therefore we have the rights to sell those 100 shares of the company. So you pick your price. You look above at these areas of resistance or supply. If you got 100 shares at 120, let's say, you can put them for sale at 125, you can put them for sale at 130, you can put them for sale at 135, 140, 145, 150. You can put them up there at 175, you can put them up there for 190, okay? But when it's more out of the money, is it going to be more of a premium or less of a premium? Just think your everyday shopping. When you go to a store, if something is in demand, is there a premium you're paying for it? If it's not really popular, is it expensive or not? No. So if you put out of the money, like up here, your premium won't be that much because there's not a lot of interest. There's not a lot of volume up there. If you put it more like here at 130, 140, okay, you're going to get more traders looking at that level. So in fact, let's say 140, okay? I'm just using hypothetical numbers. We're in at 120, we got 100 shares. We're going to place now a covered call option at 140. Okay, is this making sense, guys? I'm sorry to throw you guys off, but That's why we need proper presentations and webinars to explain this stuff, because it's difficult to just do this like this. So I want to explain this, then we can go in. I'll actually do some live covered call trades with you guys and show you guys whether it goes in drawdown or it hits. I don't care. It's all about the education. I'll do micro sizing just so we learn, but you see how it is in a live environment. Who knows? Maybe I'll do Lambo lot sizing. We'll see. We'll make it exciting. I'm just joking, but it will be fun. But think about this. So okay, Ron's going to give us now some hard mathematics. Please, guys, have a sip of coffee and take a drag of your joint, please, because we're going in hard math now. So from 120 to 140, how much dollars per share has the security appreciated? How much? Real simple. I need you guys to just boom, boom, boom off the top of your head. 20. Very simple. Okay. It went from 100 and look, I'm even holding my pen because like I want to write this down. But from 120 to 140 is $20 per share. Okay. So if we're in the money on our equity that we own, on our position. Remember, we were accumulating a position. We were dollar cost averaging in. We have an amazing order, a cost average of 120. All of a sudden, is driving 130, 135, 140. Okay, but when you're doing a covered call option, you have the option of doing them Friday expiries or monthly. So what is today? Today is Wednesday, right? Last time I checked, today's Wednesday. So they have options that expire this Friday at 4 p.m. So if I'm in AMD and I've got 100 shares at 120, maybe I put them for sale. I look at this Friday's expiration date and maybe I'll put them in at 140. There might be some interest there, okay? So I will get right away deposited in my bank account the premium. The premium, who knows what it is, it will say there. So remember, you always multiply the premium by 100. So let's say the premium is $5. Okay, there's a $5 premium for someone that is willing to exercise that off of you. So then how much money will you get deposited in your account? You will get the $5 multiplied by 100. So you will see $500 deposited in your account. This is what we call passive income. Okay, you're still in the trade with AMD. You still own the 100 shares. You are in the money now because maybe it's gone up from 120 to 125, 130, and you're also getting passive income coming through. Now, the beauty about call options is, what if Thursday comes and Thursday is a red day in the market and AMD drops a little bit? Okay, you still got paid your premium. Now Friday comes and Friday is a selling day, and then it drops back down to you were 130. Your shares were doing really well, but then the closing price this Friday of AMD is 125. Okay, so you're still up $5 a share on your 100 shares. You're doing well out there, but your covered call option for the person who purchased it, unfortunately, they purchased it off of you for $500 and it expired worthless. The AMD price did not come up to $140 by Friday at 4 p.m. So it sucks that the person who bought it from you lost their entire money. They lost that premium, but you gained that premium. Okay, so it's kind of insurance. When AMD dropped, yeah, you lost a little bit of unrealized gains, but you gained it back through passive income from a covered call option. So it's kind of a win-win situation. Okay, so next week comes, you can do the same thing. And if AMD doesn't come up to this, you're collecting passive income. I had that with Apple once for 4 years. 4 years straight, I was collecting passive income because Apple never came to that target and I owned multiple shares of Apple. So I just had covered calls and just for 4 years straight was just collecting premium. And with that premium, I was buying more Apple on the dips. I was accumulating more and more and more. So you can do this with dividends. You can do it with covered call options. The only negative, now you have to psychologically understand this. If you bought at 120 and you have that call option at 140, if the price does in fact go from 120 to 140, you are legally obligated in that contract to sell your shares to this individual that bought that option, okay? So, but look at the bright side. If you were collecting passive income, it was accumulating. At some point, maybe it goes through here. You're gonna make money on the shares regardless. So you bought in at 120 and it's at 140. You made $20 a share. You had 100 shares. You made $2,000 plus premium. Now it sucks now because AMD is at 140 and you bought in at 120. Remember what if the woulda shoulda couldas. What if it goes to 150? What if it goes to this that? But what if it comes to 140 and then you close the trade, you get your money, everything like that, and then all of a sudden it pulls back down. You can again initiate the same strategy. Okay, holy shit, I'm out of breath. That was kind of a ghetto way of explaining call options without a proper presentation. Do you guys understand? I'm just trying to get you guys, your brain thinking about what we can do in these markets. But you have to own 100 shares of the company to do that. Okay? So you don't always have to pick these companies that are trading at $100, $200, $300, $400. Palantir. Anybody know anything about Palantir? Real quick. Palantir. This was a phenomenal buy at $65. Did anybody get in? Anybody get in Palantir? This one right here, Sergio. Add this to your watch list, please. Oh, so far, add AMD, add Palantir. Abbreviation is PLTR, Palantir Technologies Inc. We're trading on the NASDAQ. It's a big boy security. Let's add it to our watch list and let's take a look at this. Okay, Palantir. What are these zones? Whose man did this? Look at these zones over here. Okay, 65 in there, pulling back into prior resistance, turn to future support. This Palantir, look at the trajectory this thing has had. Where was it trading? During COVID, let's go to the monthly. Okay, it all kind of started in 2020, started taking off right over here, 2020. Nobody knew what this thing was, $10 a share. All of a sudden it pumped from nowhere to $45. Retraced back down, supporting area. If this was one of your securities, if you figure it out, that zone, look at that consolidation. Look at that. You could trap all that. Remember the three directions? We're moving out of here. Okay. If it ever comes back down to $8 a share, I'm probably going to buy a shit ton of shares. I'm going to bring a truck and back it up. If this security, okay, ever comes back down into this demand area, okay, we're all going to buy. This will be a dream of a lifetime down here. If we can get in at $6 a share. Right now it's trading, okay, $77. But look at that move, okay? So you guys understand, things start at $5, $10, $20. Not everything starts at 100, 200, 300, 400, 500. It's, you got to do your research. You do your due diligence. You got to be the first one to kind of figure out securities. Like right now, quantum computing is in the news. We got to research quantum computing securities. Who are the big names? Who are the ones making breakthroughs right now and things like that? Start to get them on our watch list. Start to watch these things. We might get in at the early stages, you know, and then we might look back a couple of years and say, holy shit, we were looking at one of these quantum computing securities and it was trading at $10, $20, and now it's trading at 100, 200, 500,000. So every one of these securities did it, you know, like everything happens if they're good sound securities and they're not pump and dump garbage. Okay, so if we look at this on the daily, why I was saying 65 was a good area. Nice pullback right into 65, and look at it. Since it hit 65, we've been bouncing out of here right up to 77. You can do, there's an option chain on Palantir. Okay, you can do, if you own 100 shares of this, you can do covered call options with this. It might be a little bit more cost effective at $65 a share than buying something that's 200, 300, 400 like Microstrategy. So it's just whatever pleases you, your budget, everything. There's a budget for everybody. We can go look at $10 securities. Anyone heard of CLSK? Okay, I got that on the watch list as well. It's a Bitcoin mining company. CLSK. These are just, I'm just talking off the top of my head, some securities I'm watching, and trying to give you guys, you don't always have to look at $400 securities. You can look at $40, $50, $60, $70, $80 securities. You can also look at $5, $10, $15, $20 securities. It's this one right here, CLSK, Clean Spark Inc. on NASDAQ. Let's add it to the watch list. It's right over here. It's trading just under 11 bucks a share. Okay, so something for everybody. But this is like a Bitcoin mining company, so it kind of moves hand in hand with Bitcoin. You can kind of see that this thing has had lots of volatility. Okay, if you want to trade kind of the crypto space, tons of volatility. There was breakouts over here in 2018, stock splits and things like that. But this is where we're trading at right now. So this is on the monthly. So it had highs of $25, kind of came back down to here, just less than $10. And we're bouncing around here. Anywhere from $8, $9 coming up to 18, coming all the way back down to sub 10. Maybe are we going to make our way back up? If we're looking for demand, yeah, if this thing ever drops back down to $2, it's going to be a real nice discount on this security. Maybe it's accumulating. It tried to break out of this $30 range. See, it failed, came back lower high. Are we accumulating to come back up? Who knows? If Bitcoin continues to move bullish, Bitcoin mining companies, blockchain companies will continue. So I have this on my watch list. Like I trade this one thing as well. So just figure out your levels. There's a nice solid level right there, just under 15 bucks a share. You can literally see it. There's support. That bearish candle turned resistance. Bring it into the future, and anything below 15 bucks is at a discount currently. But we could potentially move back down. So here's good support at 8 bucks. Again, if it comes into $8, I'll probably be adding more to position down in there. So just guys, there's so much in the markets that we can do. Just pick your poison, pick what you enjoy. If you enjoy Bitcoin, if you enjoy mining companies, if you enjoy technology companies, if you enjoy banks, if you enjoy oil and energy companies, if you enjoy gold, there's gold companies. You don't always have to trade XAU USD. There's gold ETFs. Like you can trade GLD. It's a gold ETF. It's an ETF combined of all of the top gold trading securities on the stock market. You could have a piece of that. You could trade individual gold mining companies. There's junior miners, there's larger miners, there's Eldorado Gold. There's so much you can do. If you like trading crude oil and Forex, you can now trade individual oil securities that do the drilling and all of the refining. Like you can figure out a specific security that you're willing to trade and keep an eye on. Okay, so guys, do you guys have any questions about today's call? Like and Tesla. I just want to speak about Tesla too. Tesla's trading around our look at this. Okay, did we not put some rockets over here on Tesla back in October of 24? Look at the rockets taking off. Okay, got us up to just under 500 bucks. Now we're trading 420, just off of that nice number. Okay, so if we were doing prior analysis on Tesla over here and we've kind of rocketed our way out of here, that's safe to say. Now we have new structure that we haven't analyzed up here. So we got to start to analyze. Look at this area. When we came up there, like that whole area is big resistance from 465 to 490. Is it ever going to come back up there? There's clear double bottom support right here. If you cannot see that, we're going to have to get some glasses and fix our eyes, because right there you can see when it came into 380, sub 380, pushed out, came back down and pushed up. Yeah, Yoda called out Tesla a long time ago. Yoda is lots of knowledge in the stock markets, guys. He'll be back. He's just taking a little bit of a break with family, but we'll have him back. But yes, he's very, 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 very knowledgeable about the stock markets and options markets and individual securities. So he's taught me, he's taught Dave, he's taught everyone at SST extensive knowledge. So we got a double bottom in here. And you can start to see that Tesla is starting to encounter some resistance right here. You can kind of see either if you want to draw a box or just a line of point of interest, you can see there was a little bit gap in the market there, bringing it across, kind of like right in there, still struggling to break out of this area here. There was an impulse that made that higher high right there and then came all the way back down, coming up, hanging man candle, and now we're inside here. Okay, so where will this start to close? How will it close? Are we going to make our way back up from 430, take out 433, 434, 435, start to make our way back up to 470, 480, 490, 500? Or is it in fact going to come back down to 400, psychological 400, and maybe we got good support holding around 375? 375 if it comes down here. Again, white line inside there, right in the middle, whatever, yellow, white, whatever color you want to use, and I'm going to place an alert in there so that if Tesla comes back down here, if I'm not watching the markets, at least my alert will notify me, hey Ron, it's a good time to look at Tesla, might get a move coming out of there. Okay. You can do Tesla by buying straight shares. I know it's a little expensive right now at 420, 422, or you can look at the options chain. Okay, you can, if you're looking to buy a contract, you're looking to buy a call option, and you pick the strike price. So if it's trading around 420, 422 right now, if it breaks out of here, just breaking that high is 440. Okay, so maybe I'm looking to look at the 435 call option, the 440, maybe the 445, maybe the 450 call option. And each of them will have a certain premium and you can purchase that. And then you're asking yourself, are you purchasing the one that's going to expire this Friday? Do you think Tesla is going to break through this resistance the remaining 2.5 hours this afternoon, Thursday and Friday? If you in fact think that that's going to happen, you might look at this Friday's option. But remember, if it doesn't make it there by this Friday, that option expires worthless and you lose that money. But one other thing with options is you do not have to hold that option until full expiration. Like you do not have to hold it until Friday at 4 p.m. So if I buy it right now and I see that Tesla's getting rejected and I'm down a little bit of money, I can put that option right back on the market and get rid of it and sell it. Someone is there to buy it. And then maybe I lose $50, $100, but I don't lose the entire contract. And then so you can day trade these options, you can scalp them, you can hold them over the weekends, but then there's weeklies. So if you don't like this Friday, there's one for next Friday. Okay, you can look at the price of that. So that's 5 days plus the 2 days. You might see that there's 7 days still available on that contract before expiration. You can look at the monthlies, the ones that expire at the end of the month, so that you're not just looking at the weekly. It all depends on your horizon of your trade. Are you looking for intraday trading? Are you looking for swing trading? Are you looking for swing trades? Are you looking at maybe leaps? Maybe you're looking to buy Tesla and hold it for an entire quarter going into the next earnings. So there's leap contracts. There's ones that expire every 3 months. Those are more longer term. And they might be more, the premium won't be as much as something that's more in the money. If I look at Tesla's call options for 3 months out of the money, they'll be very, very cheap. They'll be maybe pennies. You might see that there's contracts for 50 cents. And then again, you multiply it by 100 and that's the total cost of that contract. Okay. Any questions about anything? And then again, what I want out of you guys is for the next couple days, if you guys can just formulate your watch list. Okay. I don't like giving out homework or anything like that, but just develop something, have a watch list of the securities that I wouldn't do more than 5 to get started. 3 to 5 that you're going to watch for day-to-day pricing. You're going to do a full top-down analysis, and you're going to be willing to update it on the daily. You're going to then on the weekends, you're going to maybe research a little bit more news. What happened this week with your security? So pick something. Everyone says, well, where do I start off? What security do I pick? I say pick something you're passionate about. Because when you're passionate about something, you don't look at it when you're actually learning about it or studying it. It doesn't look like a waste of time. It looks like something that you're enjoying, and the more you enjoy something, the more beneficial it is. So I personally enjoy educating about the markets. I love it. I go out of my way on my own time to be here with you guys because I'm passionate about what I do. I love this stuff. I do trade throughout the day. I've hit my daily goal, so what better way would be to chill with you guys and just enjoy the markets together. But I will be trading with you guys in a live situation. When we come into the call and it's strictly like a trading call, then I'm more focused that we're trading and not answering questions and just helping out. But this is basically our second day, like kind of introducing these stock markets, third day. So it's still relatively new. For someone, we were going to talk about platforms. Okay, so this is really important, guys. So stick with me for about 5-10 more minutes. Everyone says, okay, Ron, I'm ready to start. I got my watch list ready. Where do I go from there? Okay, number one thing is, where do you live around the world? I live in Canada. There's some of you guys in the United States. Some of you guys are all over Europe. Some of you guys are in Africa. Some of you guys are in Asia. Some of you guys are in Australia. Everywhere around the world is completely different. So when I'm speaking of what I can use here in Canada, and it might not be available for you. So this is where you have to do a little bit of research. This is also to go with your watch list. Let's research a platform. Let's just talk about the household names, like the ones that could be available to everybody globally. Okay. Let's start off with Interactive Brokers. Remember they had earnings the other day. They are a large brokerage firm, American brokerage firm, Interactive Brokers, right here. I'm not affiliated with these. I don't give a shit about sponsorships. I'm just here to kind of list some names and you guys go and you guys do your research. Okay. So number one, if I'm researching something, I'd like to come to their website. First thing I would want to do. What do you guys do here? Do you guys accept these cookies or reject these cookies? Okay, so here's their platform. Fancy stuff. I hate white backgrounds. My eyes are burning right now looking at this shit. If I was to give them a little bit of advice, I say, Interactive, guys, make your platform black. Make it dark. This is hurting my eyes. I need sunglasses looking at this shit. I couldn't stare at this for hours and hours and hours. Believe me, your eyes will be burning. I'm telling you the truth. I stare at charts probably more than everyone combined here. So my eyes at the end of the day are hurting a lot. I get headaches, migraines, especially staring at this shit. Oh man, I wouldn't be able to do this. So just like this is a turnoff for me. But you have the customization that you can change the colors to your own specifications. Some people hate dark and they like the white charts. Again, it's all personal preference. We could go on and talk about 2 hours about presentation of what's best for you. Find what's your comfort. You see how I trade here? I like the room a little bit, the light off. I like it. I don't know, this type of mood. My wife hates it. She's like, why don't you ever turn on the lights? I'm like, I hate the lights. I hate it. I don't know. She's like, holy shit. Like, what is this? Why do you like being in the dark? I don't know. Ever since I was a little kid, I used to trade in the dark and late hours. My parents would be like, what the hell is this kid doing? So I kind of kept it lights down and was learning how to trade and kept it quiet, not bothering people. But I don't know. That's just how it started from a young age. But here it is. This is an American platform, global markets, everything you can do here. Open up an account. You can open up an account, go demo, simulated. Test it out. You might want to test out their platform. Maybe you don't like it, and then you choose to look for another one. But don't just go in here, open up an account, deposit money, and start trading. That's probably not the best idea to do. So open up an account, free trial right there. Free trial. We love free shit. There. let's test it out and then go through it. Here's their platform. I'm sure that they have mobile trading. I'm sure that they have a nice platform. I'm sure that they have upgrades to if you want to upgrade, all of those things. Okay, they're all here for you. I'm not a representative of Interactive Brokers, but any questions, contact them. So that's one. Interactive Brokers. Another one, what is another? You guys throw some names out there and I'll pull them up here. So we got Interactive. Another one, big one, Questrade. Let's go with Questrade. Have any of you guys heard of Questrade? Maybe some of you guys trade it. So Questrade is more Canadian over here. If you live in Canada, Questrade. Maybe around the world where it is. So again, Questrade is available. No opening fees, no annual RRSP or TFSA account fees. You can buy ETFs commission free, free to transfer your accounts. Invest more, save more on fees. Money saved and compounded returns, free to transfer your account. So this is in Canada. I live in Canada. This one is great for Canadians. I personally trade with my own financial institution. So if you're in Canada, while I'm on Canada here, you got your big five banks in Canada. You got your TD Bank, TD Ameritrade. You got your CIBC. You got your RBC. You got your BMO. You got Bank of Nova Scotia. You can trade direct with your financial institution, and you can do the same thing in America as well. So you can trade with your financial institution, or you find a broker like this. So there's Questrade, that's another one. Wealth Simple. Anyone heard of Wealth Simple? Wealth Simple? Okay, Wealth Simple. This one is more global. So this will cover not just Canada, this will cover US, maybe this will cover more global around the world. Okay, so we got Wealth Simple. Fantastic over here. And these are all regulated brokers. These are not like kind of Mickey Mouse and stuff like that. These are real financial platforms. Another one, guys, is you guys probably are aware of Robinhood. Robinhood, I know this is very, very popular with retail traders. Robinhood has fixed their shit. They got their shit together. But during COVID, they fucked a lot of retail traders. So I lost a lot of respect during COVID for this platform. There was a lot of retail traders that were trading in GameStop and AMC and a lot of those Reddit meme stocks and shit like that. And they froze it for 3 fucking days where traders could not get out of their position, whether they were in profit or in drawdown. They closed it. I have never seen that before. Never. That was the first time I've ever seen that. So I personally do not trade with this. If they did it then, they might do it again. I don't play games like that, especially when you're moving a little bit more capital. I can't afford to get closed out of a trade, and I can't even access the platform. No. So that's why sometimes if you find cheap platforms and they keep preaching zero commission fees, this and that, you got to take the good with the bad. You know, so someone asked me, Ron, well, why do you pay $10 commission? I can get that down with more transactions, no problem. I can get that competitive pricing at $2.99, $4.99. But I prefer having my fills instantaneous, whether they're market orders or the limit orders. I prefer trading in the pre-market hours and after hours as well. I have the coverage to do that. I have access to depth of market, additional information. I never have to worry about TD Bank shutting down. I've never seen it. I've been using TD Bank since I was a teenager. So there's pros and cons with everything. Robinhood, now the CEO came out and said, we made a big mistake. We fixed everything. It won't happen again. So again, tread careful. Robinhood is out there. But they have a lot, okay? There's Robinhood. What else? Webull, Lisa Webull. Yep, I was just going to say that. So there's Webull. Webull is, we started using this Webull, Lisa, from day one when we started SST here, when we were doing a little bit of stocks. So I have some old videos in the archive of Webull. It's a great platform. It looks similar to TradingView, very, very similar platform. But there's Webull, okay? And this one should be global for everyone. You got your candlesticks, you got your depth of market, you can track order flows. everything. Customizable charts. You have all your indicators. You have everything. It's free. That you might need to upgrade for certain data for level 2, level 3, level 4, depth of market, whatever. It all depends on your expertise. If you want to pay for a platform, TradingView, we got to pay for it. Like all those alerts I'm putting, those are part of the premium package I pay with TradingView. You can have the free version if you like, but you're just limited to certain functions and indicators. Okay, so we've gone through a lot here. We've gone through interactive brokers, Wealthsimple, Questrade, Robinhood, Webull. What are we missing? A few other names. Am I missing anything, guys? Fusion markets are more forex, but they do allow you to trade stock CFDs. I don't trade stock CFDs. I trade the actual owning the real shares of the company. I don't do CFDs, but if you want, yeah, Wade, you can definitely look at Fusion and trade. They have a select securities that you can trade, and it's kind of same thing, trading with like pips and things like that, percentage in points. Biggest log, I just realized that the channel is going back to its roots. Yes, sir. We're going back to the roots. It's where it all started, so we're going to bring it back here. Tradeovate. Winchester, eToro. Guys, just mention them. I don't need to go through all the platforms, but mentioning them. Maybe some of you guys are writing these down. eToro, Tradeovate. Trying to think what else is out there. Questrade, the big banks, obviously your big institutional banks. Okay. NinjaTrader, yeah, a NinjaTrader. NinjaTrader more for futures market, Aaron. More futures, but strictly stock. Start off with those. See if they are compatible with where you live around the world. Unfortunately, not everyone lives in Canada or America. Everyone lives somewhere abroad. But make sure you are following the rules and regulations in your country, and enjoy stock market trading. If I think of a couple more, I'll post them in the Discord. I'll think of more, but this is a good start. So what I would recommend is getting started with a platform, opening up a demo simulated account with any one of these. Open a demo account. Just test it out. Take it for a test drive. When you go buy a car, I don't care how much money you have. When you go buy a car, you want to test drive it. Okay? You want to get in there, take it for a test drive, see if it's comfortable, see if you like it, turn the music on, rev it up a little bit. Do you see yourself in this car? Do you want to drive it? Like, very rarely does someone just walk into the dealership, say, I want that car, and boom, and just drive out of there. They've test driven it, so they see, it handles well, it doesn't, pros and cons. Maybe going to check something else and another model. So same thing with this. Test drive these platforms, see which one you like, see if it's compatible with what you want to trade. And also in Canada, guys, if you're Canadian, you can utilize your tax-free savings account for trading and investing. That's one of the pros of living in Canada. We have a tax-free savings account that all capital gains are tax free. You can a certain amount, like you can put into it. So it was kind of introduced in 2008, and up until now, I believe it's, don't quote me on this, but I think you're allowed to, if you haven't utilized it, you can put up to $100,000, because it goes up like $5,000-$6,000 every single year. So it kind of compounds. So if you haven't used it, you have the access to deposit of up to $100,000, and you can trade and invest that absolutely interest free. It's a tax-free savings account. It's unbelievable here in Canada. And then we also have RRSP, your retirement savings account here in Canada. Similar to in the US, you have your Roth IRA. So you can trade your retirement if you like. But you got to know what you're doing, because it is your retirement. But you can trade your RRSP. I'm surprised when I have conversations out here with a few friends and family that they didn't know that you could trade it. So absolutely, you can trade it. You can invest in long-term companies. And remember, your retirement is for 5, 10, 15, 20, 25 years down the road. When you retire at the age of 65, then you can start to draw off of this, and you're at a reduced tax bracket because now you start drawing from it, but you're retired. So you get it at a reduced tax bracket. I'm speaking here in Canada. Maybe US is very similar, but you can utilize your RSP tax-free savings account for long-term trading or day trading and things like that. But I'm not a financial advisor, guys. Don't want to get into that. But I'm here to help with any advice that you guys need, and we will get more into these markets, guys. Let's take a little bit of a break right now. Let's grab some lunch, and tomorrow, Thursday, we'll review the markets. If you guys want, tomorrow we can switch it up. We can go back to US 30 and NASDAQ just to kind of break up the week. We'll talk briefly about what's going on in the market, stock market news, but I want you guys to more work on getting a platform, figuring out a platform, figuring out your watch list. I've given you guys enough to do. Maybe tomorrow we'll have a chill day. We'll look at US 30. We'll look at NASDAQ. We can talk about the Qs tomorrow. How about we talk about the Qs? Ron hasn't talked about the Qs. So sticking with the stock market focus, we'll stick with the Qs. QQQ. This one. Let's see here. There's a lot that you can do with you can short. There's volatile ETFs. Okay, so it's this one here, Invesco QQQ Trust Series 1. It's a ETF fund, okay? So ETF, electronic trading fund, and it's of our top tech companies. So it's very, very similar to NASDAQ 100, but NASDAQ 100 is Forex. In the stock markets, add this. QQQ is the ticker, and it's on NASDAQ, the American flag. That's the one we want. Let's add it, and here it is. Here's our QQQ. Okay, we're trading at $535.30 per share right now, and you can do your analysis. Okay, so it's been moving. This is all tech. Higher high, higher low, higher high, higher low, higher high, higher low, new all-time high. Up here, okay? You can go back monthly, weekly, daily, start doing your analysis. Maybe tomorrow we'll add this in our mix, QQQ. Okay, so this is an ETF. Let's just do over here 1 second. And this is NASDAQ 100, okay? So I know a lot of you guys are very familiar with NASDAQ 100. So, and this is kind of the stock market option of NASDAQ 100. So you can see you can look at the specific days, see if they kind of are correlated. See this big red candle right here with this wick, August 5th. Here's August 5th on QQQ. See where they dropped down the market, picked up that liquidity and came back up. You kind of see the reversal on NASDAQ 100. See right there that pullback, holding support at 18,317 on NASDAQ. I know Lisa, Noor, I know you guys love NASDAQ, but now there's the move. There's the pullback right here showing it. 448 was an opportunity here if we're trading the stock markets on the Qs and continue to run. So like right now, look at NASDAQ is a bullish, ignited. Oh shit, look at the technicals. Following a hammer candle yesterday. Oh my god, you guys are going to get me stuck here and not even go eat anything. Look at yesterday. Like red. Beautiful liquidity grab, come all the way back up, close near the one hair off the high. It is a bullish pin bar candle. Oh, just shy of a little bit from a strong hammer candle. Look at the ignited open, no drawdown today, took out yesterday's high and drive. That's the firecracker pop and move. And we're just filling. We filled right here, January 6th, fill, 736 is filled. We're coming up here, we filled 875, and now we're trading at our top resistance right here, where I would have a nice fancy red box, bringing it across, and we're almost there. Just kind of just moving a little bit away from it. This big strong daily candle is closing in 3 hours and 20 minutes. As soon as it closes, figure out, will it close in the red box, above the red box, get rejected? How much of this bullish volume? It looks like a really nice large bullish candle. Figure out where 50% of it is in case there's a pullback tomorrow. All of those things, everything that we learn here. And same shit with the Qs. Look at how the Qs, I know the candlesticks look different because this is now stock market. This is not Forex, but you can see yesterday it came down. It was a bullish pin bar candle. Nasdaq is showing more of a hammer style candle. And then there's the ignited open and the pop. The markets, remember, close at 4 p.m. And then we have after hours trading. We got pre-market trading. Then Wall Street opens at 9:30. So you can see that that's that gap in the market from those after hours pre-market trading. And then it gapped it up and the Qs are moving. There's the red box supply of Nasdaq and QQQ. Same shit. There's our red box. Bring it across, and you see we're just shy of hitting it. It's right in there, around 537. So guys, if you love NASDAQ, I love you guys. We love QQQ. Put these two side by side, and now you got the best of both worlds. You got Forex, you got futures, you got stocks. You can do a three chart. You can do NASDAQ 100, you can do NQ futures, and you can do QQQ stock market. Okay, beautiful stuff. So maybe we'll analyze this tomorrow. And then if you guys say, Ron, NASDAQ, I can make a quick pivot from Forex right here and show you how it looks on the Qs. And guess what? This is an ETF. So if you want, you buy right into this ETF. A great way to park your money. If you want just something safe and you believe in technology, buy this ETF. You're getting exposure to a lot of tech companies. You're getting exposure to NVIDIA. You're getting exposure to Microstrategy, Tesla, Apple, Google, Microsoft. All of these big Amazon, all these big tech names, you're getting exposure, and you can put your money in here, like I was saying, through an RRSP account, through a tax-free savings account, and hopefully tech continues with AI and quantum computing and all kinds of shit in the future, and this thing keeps driving. If you follow NASDAQ, this should become just real simple for you. It's pretty very similar. Okay, guys? We've done a lot today. I hope you guys enjoyed today's education. We processed a lot today, a lot to take in. But the plan for tomorrow and for you guys is figure out a brokerage or bank or institution. Also, tomorrow, maybe we'll do QQQ. We'll take a look at it. We'll put it side by side with NASDAQ, and we'll watch how they trade together. We'll get a feel of everything, okay? We'll also talk about what is big in the news tomorrow, whether it's one of those companies we talked about. We talked about Netflix. We talked about Tesla. We talked about AMD. We talked about MicroStrategy. We talked about lots of securities today, okay? Guys, this is a lifetime of education. So when you now pivot into the stock market, it's endless because there's so much you can do. You can do intraday trading, you can do investing, you can do passive income. There's so much to learn in here. We're just getting started, guys. I hope you guys enjoy it. It's unfortunate that there's not a lot of people on YouTube, but it is what it is. I wish there was more people that were interested in the stock markets because they're missing. Oh, they're missing out. I'm telling you, in a couple months and years, how far ahead you guys will be compared to the others that are joining. I just want to say I appreciate you guys putting the time in to spend with me and allow me to do my thing. I'm really excited for everybody to learn this because I know when I learned the stock market, it was game changing. It was game changing because this is something you go through your everyday life. You're going to go right now and you're going to shop somewhere. You're going to go somewhere and you can actually trade that company. Okay? If you go to McDonald's, that's a publicly traded company. You go to Walmart, publicly traded company. You go to Costco, publicly traded company. You go to the bank, it's a publicly traded company. All of these things. If you go buy a laptop at a gaming store, I'm sure that the components are from NVIDIA or AMD inside there, and some other names. But Captain Boom, their loss. I hope the best for everybody. I know. I don't need to hope. I know. I know what's coming for you guys. So, but just listen to what I'm saying, guys. Take some advice. Take it patiently. Okay? Process the information and take it day by day. I'm telling you from my mistakes, I failed to do that. I started off like I went from 0 to 100 real fast. I went from 0 to, and I lost everything. I should have gone 0, 10 kilometers, maybe got up to 20 kilometers, driving like a grandma on the slow lane. That's how I should have done. I was more on the fast lane, like we're driving on the Autobahn and just driving no limits. And it destroyed me. It destroyed me. So hopefully maybe some of you guys have gone through that too. That reckless trading, that gambling style, that get rich quick, all that bullshit, all those gimmicks. We've probably gone through it at some point in time, but hopefully we've learned from it and we've moved on. Stock market, financial markets are a long game, not for tomorrow. It's for next week, next month, next year, 5 years, 10 years, 20 years down the road. We're going to have this conversation, and we'll look back at these securities and say, holy shit, AMD was trading at 120 and now it's trading at 1,000. We're going to have these conversations. You're going to see. And you guys can be get your feet wet, putting some securities on your watch list. And then soon when we get really, really good at this, you guys will tell me, Ron, check out this security. It's at this level. It's pulled back 30% from the highs and it's at a demand zone. And I'll say, fantastic. Let's pull it up. Let's chart it together. Let's trade it together. The more eyes we have on the stock market, the better it is for everybody here. And then we look at the securities together as a team and as a community. Okay. But thank you guys. I really do appreciate you guys. Let's call it a day. Enjoy. If you're going to trade the rest of the afternoon, please be careful. Again, manage your risk. If some of you guys have hit your daily goal, if some of you guys have exceeded your daily goal, walk away from the markets. There's nothing wrong with that. If you're in some drawdown, have some rules as how to recover. Don't revenge trade. There's always tomorrow. Remember that. There's nothing wrong with taking a loss. Get over it, guys. Set your ego and forget it. I take losses. Dave takes losses. Everybody at SST. Banking institutions, Wall Street, they take losses. We've had multi-billion-dollar corporations go bankrupt because they over-leveraged and they lost all their money. So doesn't matter what level you're at. Take a loss and take it professionally, and let's move forward. It's part of the game. You got to understand that. Maybe you're on a win streak, and maybe you've hit the last 10 days, and maybe you've hit the last 100 trades, and they're all profitable. But at some point, you're going to take a loss, and then how you deal with it will really determine what type of trader you are. Because I've seen traders have win streaks for 3 months, and that one loss destroys them and they can never recover. It takes them years to recover just from that one loss because they psychologically were not prepared for it, because they always thought that they were going to win and they were going to win every single day. So prepare yourself mentally and understand it's part of the game. It's part of the game. Okay. I take losses in front of you guys and I walk away from the markets as well. Okay. So, and it sucks for me because I'm in front of you guys, like I'm showing you guys this and I take losses. So I just want to show you guys, everybody takes losses. It doesn't matter if you're on YouTube or not. It's part of the game. Okay, guys, thank you. I appreciate you guys. If you guys just on the way out, put in a name of a security that maybe you want me to analyze, put it in there on YouTube and in Zoom. Throw in a security that you guys, if not tomorrow, I think what we'll do is this. We'll do NASDAQ with QQQ and just some day-to-day news tomorrow. Okay. Have a great day, guys. God bless. Enjoy the rest of the day. Have a fantastic Wednesday, and we'll see you guys Thursday. Thank you, guys. Yeah, just remember, just throw something in the chat of a security that you want me to maybe analyze, something that's looking good, something that's looking juicy right now. Okay, have a good day, guys. Thank you.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.